Porque si no te van a dejar nada, entonces ¿para qué lo vas a invertir?
Claro.
¿Ah? Pero entonces tú tienes que mirar el operating statement de la inversión, que es donde te digo que yo considero la hipoteca y todo lo otro.
No es que no se considere, pero dentro, bajo el operating income, yo estoy leyendo un libro que él lo separa.
Sí, pero aún así tienes que mirar el debt ratio en algún lado.
Sí, no.
Entonces la forma ideal de hacerlo es en el operating statement de la propiedad, de la inversión.
Él lo hace un poquito diferente, pero está bien.
Bueno, hay formas de hacerlo. Por ejemplo,
Ajá.
yo tengo gente que lo hace, o sea, te consideran la renta después que hacen el operating expense. O sea, te cogen y te ponen todos los gastos operacionales. Obviamente, al no poner la renta te va a dar un margen mucho más grande.
Al no poner el mortgage.
Al no poner el mortgage te va a dar un margen mucho más grande. Y entonces, después hacen un operating statement separado que dice net income de la propiedad, ponen taxes, ponen seguro y ponen debt reduction, y ahí te consideran el mortgage. Para mí, digo, es una forma de hacerlo. Para mí es mucho más fácil y más efectivo incluirlo desde el principio como debt amortization, y ya tengo ahí, inclusive si he hecho escrow, tengo ahí ya seguro y taxes y todo.
Sí.
Y entonces es mucho más sencillo. Pero lo importante sobre todo es que cuando tú compares los tres modelos, realmente haga sentido la inversión desde el punto de vista de que aun cuando tengas en vez de un 5%, que es lo que típicamente tú calculas de tiempo vacío de los apartamentos o de la inversión, vacancy. En mi caso, a mí me gusta el safe con un 20-25%, para si el vacancy sube por la razón que sea. Bueno, por eso es que, por ejemplo, en las propiedades mías en Sanford, yo no tuve problema cuando el mercado se cayó, porque yo todas las consideré con unos ratios mucho más altos que lo que realmente. Yo tuve un edificio en Sanford que estuvo vacío 3 años, la mitad del edificio, y aún así yo estaba safe. O sea que, de nuevo, el mensaje que te estoy mandando es: yo te puedo probar matemáticamente que tú puedes hacer transacciones con mucho menos. Los bancos te lo van a probar. Eso no quiere decir que yo las haga, o que yo se las recomiendo a mis clientes. Porque tú les recomiendas algo con un 5% de vacancy, si se va a 15 o 20, entonces, Rafi, ¿por qué tú me dijiste que era 15 o 5%?
Right. Históricamente hablando, en average, los vacancies son más o menos
entre 5 y 8. Histórico nacional. Claro, si te vas a Nueva York es como 2%. Si te vas a áreas como, por ejemplo, irónicamente, Las Vegas, llegó a estar en 22%. Las Vegas se vació cuando fue en el 2009.
Bueno, porque se colocó.
Imagínate, hubo propiedades en Las Vegas que bajaron 72% de su valor.
Diantre, wow.
Y no fue una ni dos, no muchos. Yo tengo un amigo, Paquito Cordero, yo le conseguí una casa a una milla del strip, una casa buena, una casa de 4 cuartos, 1.900 y pico pies cuadrados. La compré porque él tiene un hijo allí y quería tener algo allí. La compró en 160,000 pesos. Hoy en día vale 390,000 pesos, pero en aquel momento, cuando la compré en 160, el precio que estaba en el website para la casa eran 459,000 pesos.
Wow.
Pero el mercado se rompió, pero...
Sí.
O sea, a nivel desastroso. O sea, fue...
Wow.
Bueno, todavía, al día de hoy, y Las Vegas ha subido brutalmente, todavía no fue hasta el mes de enero o febrero de este año que llegó al cap de donde estaba.
¿Sí?
Se tomó más tiempo que ninguna otra ciudad de los Estados Unidos. Pero fue porque el bajón fue brutal, 70 y pico por ciento.
Ahora mismo Phoenix está bueno también de nuevo.
Phoenix ya está alto arriba.
Phoenix.
Los Ángeles está.
Ujú.
Texas en su gran mayoría, Austin. Houston
Yeah.
ahora tiene unos problemitas con lo de la inundación.
Ujú.
Pero Austin, el Valle, Sacramento está fuerte en California. O sea, ya los mercados están otra vez trepados arriba.
Ujú.
Y
Pero lo bueno es que no hay más control que cuando back then.
ahora mismo sí.
Ajá.
Digo, está empezando a volver a ponerse bullying. Está
Sí, pero
Bueno, déjame decirte algo.
Ajá.
Ayer o antes de ayer,
Ujú.
yo puse una oferta en una propiedad en Nueva York para un cliente. Y me llamaron 3 horas después diciéndome, Rafi, yo sé que yo te dije esto, pero después que te hablé contigo han venido 3 ofertas, una de ellas $200,000 por encima de la tuya.
Wow.
Entonces tuve que llamar al cliente a explicarle y el cliente me autorizó para ir para atrás con $300,000 por encima.
Ya. No, acá abajo también estamos con bids, también en las casas. Pero lo que me refiero es que la gente que está haciendo loans, como hay más control de los bancos,
Sí, sin lugar a dudas.
Sin
lugar a dudas. El lending
Ajá.
está mucho más restricto que lo que
Exacto.
estaba. Y de eso va a hablar hoy.
Okay.
Hay
Ahora vean acá, en esa oferta de Nueva York, el que está comprando está usando préstamo, cash. Wow. And they're paying for that. Do you think they're overpaying or paying?
No, para que tengas una idea. La propiedad, originalmente, él le iba a comprar en 2.4 millones de pesos. Va a terminar pagando por ella 2.8 porque aparte de los $300,000 pusimos $100,000 en escro para unas mejoras que hay que hacer.
Uh-huh.
La propiedad va a tasar 3.1. Claro, no la pueden vender en 3.1 ahora mismo por los issues que tienen, que nosotros estamos poniendo $100,000, que yo creo que va a ser lo que nos va a dar el key a ganarnos la propiedad.
Uh-huh.
Pero claro, eso que estamos hablando es como una casa aquí de $300,000 en Nueva York.
¿Oh, sí?
No, sí. Una propiedad de 2.4 millones de pesos en Nueva York, en Manhattan, es como una casa aquí de $300,000.
Wow, mira, ahora y vi que tú lo tienes también en el artículo de la revista Real Estate que salió ahora de Florida, de los internationals, de los diferentes mercados, la gente está comprando aquí. China,
China está haciendo inversión grande,
Alemania,
Japón está haciendo inversión, Alemania, Inglaterra sigue haciendo inversión, ahora Brasil está haciendo inversión, Venezuela sigue haciendo inversión. Hay un flujo de gente del Medio Oriente que están invirtiendo en Florida.
¿Oh, sí?
Oh, sí.
Yo iba a coger, en el board dieron la clase de international,
Sí.
pero salían 500.
Yo la cogí, pero realmente ni lo pongo en las tarjetas ni nada, yo la cogí por la experiencia.
Ajá.
Yo soy veterano, soy green, cuanta certificación de mierda esa sale, yo voy y la cojo por no tener
para que no te cuenten.
el background, sí, tú sabes.
Yo iba a coger, pero no pude.
Y nada, yo no hago residencial, pero las cojo para uno, que no le cuente después a uno.
Sí, pero ese artículo está bien bueno.
Y déjame enseñarte otro que sale esta semana. Hablando de valores. Ese está al frente y después la página de atrás.
Housing Brutal for Vibes. Spring home buying season. Ya, esto está pasando en Pan B. Las casas de 200,000 para abajo son las que tienen muchas ofertas.
Sí, no duran nada. O sea,
Ujú.
se van como amarillo en boquería.
Ujú.
Oye, aquí mismo en Orlando, en Winter Spring, yo tengo que llevar de mi casa,
Ajá.
¿verdad? Y voy a construir. Entonces alquilé un apartamento.
Ujú.
Entonces le dije a mi hija, le dije, búscame apartamentos, algo por ahí que tenga los 150, 200,000 pesos, porque lo que hago es que finalmente compro uno, lo vivo en lo que termino la casa, si no tengo prisa, y después cuando lo venda, le saco algo y lo...
Ujú.
Pues me mandó 2 propiedades. Me dije, ponle una oferta esta, sin verla. Me llaman a ti, papi, se vendió. Pues ponle una oferta esta, sin verlas,
Ajá.
papi, se vendió. O sea, lo hemos hecho como 6 veces, todo vendido.
Yeah.
Cuestiones de horas.
Yeah,
Horas.
Wow. Ujú. Ujú.
Oye, Edwin, eh, ¿tú recuerdas cuando se hizo la construcción de la iglesia?
Ujú.
El muchacho americano, aquel que trabajaba en aquel momento, era presidente del ministerio que creó nuevas iglesias para ayudar en construcción, que fue el que vino y medio manejó el proyecto allí, que después nos costó carísimo con él. ¿Te acuerdas cómo se llamaba él?
Un muchacho joven.
Bueno, no era tan joven, pero era un americano que vino, que fue el que mandó nuevas iglesias, que supuestamente nos iba a costar unos 2 o 3 pesos, y entonces resultaron terminando facturándonos el contrato 30 y pico mil pesos. ¿Y te acuerdas de eso? Yo estoy tratando de acordarme el nombre de él.
Doug. No.
Doug.
¿Verdad?
Doug.
Ajá.
¿Tú nunca has oído más de Doug? Tú sabes que me dijo el otro día, hay un ministro regional que es o que era ministro regional en California, se llama Charles Lamb.
Ujú.
Charles Lamb me dijo que ese muchacho Doug, después de muchos años en la iglesia, porque él era pastor, y de pastor salió a trabajar con nuevas iglesias en el proyecto ese de construcción que tenía. ¿Te acuerdas? Tenían un trailer con herramientas y
Ujú,
esas
ujú.
cosas.
The Vision Builders.
Correcto, Vision
Ujú.
Builders. Ajá.
Sí.
Pues me dicen que, y esto no lo he podido confirmar, por eso te preguntaba, pero me dicen que lo cogieron, parece que había utilizado fondos del Ministerio en asuntos personales,
Ujú.
y el tipo se desapareció.
Investment.
Dejó, sí, una forma de empezar,
Ajá.
pero se desapareció, dejó el trailer en un estacionamiento del aeropuerto de Atlanta. Lo vinieron a encontrar creo que 3 meses después, cuando lo iban a poner en subasta, que encontraron el registro y llamaron a la denominación. Y el tipo no ha aparecido más.
No sé, ¿verdad?
Eso me lo dijo Charles Lamb, que era el ministro regional de California, porque él había ido allá a varios proyectos.
Ajá.
Y el otro día hablando, nos encontramos en el aeropuerto de Orlando. Él venía a una reunión aquí, yo me iba para Nueva York a algo. Y estuvimos hablando un rato y me dijo eso. Oye, es más, le tengo que preguntar a Manny, a ver si Manny sabe de esos dos que era que se llamaba, ¿verdad?
Sí.
Manny, ¿tú te acuerdas del blog? This is by the way, Edwin Normandy, Jorge Machado.
Jorge, nice
Edwin
meeting you.
works the Melbourne Palm Bay area.
Oh, okay.
Brevard County.
You know the new LA Fitness they built out there?
They have a few. They have in Palm
One
Bay.
in Palm Bay.
Yeah,
Right.
I'm a member of it.
Just until recently, my son was the head of personal trainers there.
Really?
Yeah, Henry.
On that location?
At that location, he just relocated back to Kissimmee. So now he's in charge of
What's his
Kissimmee.
name? What's your son's name?
Henry?
Henry.
Yeah. He's a. Well, they're all like that over there.
Yeah,
You got a couple Russian guys over there, but my son was the head of them. He was
Really?
the head of the personal
You
trainer.
have a picture of him? I have to. Most likely, I know who he is.
Yeah, because when they opened it up, he.
Is he still there?
No, he just transferred over here.
By the way, I send the link to your wife.
Okay.
El segundo mío, Joshua, sacó la licencia de trainer.
The personal trainer.
Yeah. También está así.
Yeah, this is him.
Oh yeah, I've seen him. Yeah. That's your son.
Yep.
Yeah, I remember him.
In fact,
And neither of you go to the same gym?
No, I go to that gym.
in
Just
fact,
to visit.
A ver al muchacho.
in fact, this is him again. In fact, over there, he got him into bodybuilding, and he did the bodybuilding competition that they
Nice guy too.
that they had in Melbourne. It was over in Melbourne, the body competition.
Buena gente, sí, yo me acuerdo.
He got.
I didn't know he wasn't there anymore.
Yeah. I mean, he goes there once in a while.
Yeah. But does he live in Palm Bay?
He used to. He lived over there for about a year.
Okay.
When they opened it up, they brought him over there, open
Okay.
it up, get it all set up.
So he has been working for the company for a while now.
Yeah, it's going about 3 years. So they brought him back. They brought him back to take over the 2 Kissimmee ones. He started in the Kissimmee one, then they brought him over to Palm Bay to get that one set up, and then they brought him back to fix Kissimmee, plus the other one they opened up in Kissimmee, to see both, but he was still overseeing that one until they got his replacement trained.
Okay. Yeah, but the area where I live, we have 3 new ones. Palm Bay and 2 en Melbourne.
Melbourne, yeah.
En el mall debemos estar una. Ahorita estaba yo de aquí, que queda aquí al lado.
Sí, tú me lo habías dicho.
Sí, pero lo tienen bien descuidado, mano.
Sí.
Sí, mano, compa. Es que aquel es brand new también.
Yeah, and that has a lot to do with the managing,
Sí.
the manager of the facility.
Yeah, because
Sí,
when my son left Kissimmee on Hunter's Creek, he was one of the top producing ones. Then went over there, made that the top producing one, and
Then
when
which one
Kissimmee
fell
fell
apart?
right
So
down.
they call him back.
So they call him back
Yeah.
to do move. So now he lives right behind the LA Fitness in Kissimmee, the one on Young, right across Loop.
Mhm.
There's I never knew, but there's brand new apartments that they built like behind BJ's. Behind BJ's and all that, there's the whole complex.
Oh,
I
yeah,
never,
yeah,
never
huge.
huge. I never knew it was there. That's where he's living now.
Is the one in Kissimmee new also?
Both of them are relatively new.
Yeah.
Yeah, I mean, Hunter's Creek's maybe 5 years old, and the other one's maybe 3. So,
Yeah.
The presentation is already set up on the computer, Jorge.
okay, oh yeah. I'm gonna get
I was
that.
telling Rafi that I have a client from Venezuela
Oh yeah, I mean, I want you to bring that
at the class.
on the class,
Okay.
but let's talk to him about that now.
He has a bakery for 23 years,
In Venezuela.
and that's where his most of his income come from.
Mhm.
Matter of fact, he got a loan from ¿cómo se llama? Normandy.
Normandy Group in New York
Yeah,
did a finance for them on a presidential property.
but obviously he's I mean the interest rate I don't remember exorbitante.
It was high interest.
Yeah.
Well, if it was a residential loan to a foreign national, it wasn't that high. It's probably like 9%.
I really don't remember what was the percent, but we're trying to sell the one that he's been in only 1 year to buy this other spot for 335. But the one that we're selling is 225.
But the big question is there is any program that we can use that will allow him to consider his income from that business in Venezuela?
I mean, it's used as a basis for his projections, but it's a totally different market. So,
But it's possible to do it.
well, let me back up. It would be if he's got a green card.
He doesn't have a green card.
If he doesn't have a green card,
He's here by ¿cómo se llama esto?
Tourist.
Asilo político.
Oh, that's different.
well,
If it's
as long,
political asylum, it's-
as long as he's got a
He has a
visa.
B1, B2.
Right, as long as he's got a visa
Yeah,
that's
yeah.
not a student visa or
No,
a
the
visitor's
B1 and
visa.
B2 is political asylum.
Yeah, as long as he's got that, yeah, then we can use the SBA program.
That can be used?
Yeah,
Even with that income coming from Venezuela.
it won't be based on the income. Remember, and that's one of the things we'll go over today, is that the basis of a loan to business is the business cash flow, okay, not what comes
Not
in
there,
personally.
yeah.
So the Venezuela operation is viewed as his personal income, but it's not viewed as the business income. So it's gonna be based on projections of the one that he's gonna start, and the one in Venezuela acts as credibility for some of the numbers for this one and the experience.
But he's buying for a residential. It's not a
It's
business.
not commercial.
Well, if it's not commercial, I mean, the program that he's in, it's gonna be the same. It's gonna be about 8 to 9%. He's not gonna get anything cheaper until he gets his visa.
Yeah. Yeah.
The first thing that we need to check is what is his visa condition, what status his visa one is.
Now, if he has the visa, he should be able to qualify for a conventional loan, conventional Fannie Mae loan. The problem is whether, normally what they do is they count like half of the income overseas.
And right now, what is it? What is the currency there?
Bolivar.
Is it Bolivar?
The currency is called,
And it's
very hard to get out.
Yeah.
That's what it's called.
Exactly.
They used to call it Bolivar, now they call it Chavez.
Well, now it's called Trump, because Trump cut out any movement or visa with Venezuela. So Venezuela, for all intents and purposes, is like North Korea to the US right now. So,
Oh, yeah.
so nobody can come in and get a visa, nobody can come in and trade money and so forth.
Oh, wow. Yikes.
Yeah, when all the Venezuelans who were, we love Trump, they didn't realize first thing Trump was gonna do is cut them out.
Jorge, are you planning to use the website at some point in time?
Just to show it,
Well, because we can also bring it here.
because the applications aren't there, although, I never make you guys go get them there. I send them there, but they're there.
What is the website?
Genbiz.com.
And they are on ours also. We connected to ours.
Show me.
I think so.
Yeah, you're supposed to put the link, but I've never seen the link.
Yeah. Let me show you.
The Mickey Mouse.
You remember?
Yeah, I remember that, but I didn't think you put the actual.
Well, when you fill out the form, then you go straight to the website.
Okay.
Yeah. So let me leave that one open, but so you can show it later on, and then we need to add yours. Do we have it back there? There it goes. Okay.
This is how I treat the bad clients. What if they?
Oh, by the way, before I forget about it, Fraticelli, the people from they want to have a meeting with you and me. They have a lot of questions and so on. Will tomorrow be a possibility? Because I remember that I will be in New York Friday, Saturday, and Sunday.
I say yes with a caveat. My car's in shopping it.
You have
Doing-
another.
Was doing smoke out the back, so I brought it to my mechanic today. He's supposed to have it ready for me tomorrow, but
Hi.
Hey,
he hasn't guaranteed me.
ooh, come here, Liza.
He hasn't guaranteed me the time.
Liza.
I said,
Hi.
George Machado, nice
George
to meet you.
Machado.
Nice to meet you.
She's my daughter.
I am his daughter.
She works here with me also.
Poor woman.
I know. Pray for me.
So, I mean, she would prefer to do it late afternoon?
Yeah, late afternoon would be better for me because I won't have a car.
Okay. If not, we can do it Monday afternoon. Will that be better for you? Come here, let me show you something. The rent roll, I put it together, and I'm finishing it off. I said credit. Some notes that I want confirmation. And when I need confirmation, I'm not telling you, he's not even telling me, yeah, that's the date, I want either a copy of a check or something that I can back up later on. Well, but he doesn't. So I'm starting to put together now the list for about 6 different tenants that he has that he without me. So I'm working with that. But anyway, she's supposed to have her part, which is everything else but the rent roll. But then I talk to them about your comments and so on. And basically what we're doing is we are putting together a pro forma of what the property looks like in terms of square footage and so on. And I send it to Francis for a soft budget. Obviously, we will not be able to have a full budget later on, but a soft budget will give you something. What looks like there is a possibility that we can buy the land and the two buildings together from the owners of the property. They have the blueprint already, and they can build it, and then what we'll go in immediately after the check is done and we do the interiors for the actual shop. And then, obviously, we have to do some that we are finally getting, and I have the new application here. Tomorrow. And I'm getting the lease.
Hey, honey. Yo te volví a llamar después porque vi una llamada perdida tuya, pero no te conseguí. Me imagino que estabas en el cierre. Ah, ok. Wow. Pues cuando tú llamaste yo estaba en el gimnasio. I was at the gym. Ah, qué bueno. Nice. Aquí tuve un buen meeting con Rafi. Sí, de getting an update con todo lo que los proyectos. Sí, estoy aquí. Sí, me dijo que se lo presentó al yo no sé si me imagino que un banker. Todavía no lo ha contestado, pero que eso va a depender del income de tu mamá. Sí, pero él tiene una idea de, como nosotros lo estamos pagando, que lo hagamos como que nosotros estábamos como colateral, algo así, para entonces hacer algo de restructure donde se pueda hacer el pago al principal interés. Sí, pero en settlement, tú no sabes o sea, si te hacen el settlement, hay que comparar entre lo que él puede hacer con este señor y el settlement. Ya. Pues el banco dijo que they want to do it.
Well, yeah, we will have to do one for this property, and then we will have to do one.
Okay.
One for each of the properties, to pay those.
All right.
One big
¿Está bien, honey? Ay, bendito. ¿Puedo siga a atender? Ok, honey. Ok.
Cinco, yes?
Cinco Cash is the network, and then that's Continental Investment International Network Company.
So that's the email that your buddy's still using.
Well, we are ready to call him up, but it's interesting, you know. He
I just had to share that. It's just like, come on, an attorney asking me that question?
called. Listen to this. He called Francis, the architect, and told him, "Hey, listen, I need the releases of lien, so we can pay." He said, "Well, I cannot give you a release of lien until I can pay."
Mhm.
Well, he went out, spent 2 days with a California lawyer, which I thought he could do it because he's a lawyer.
Mhm.
But basically sent out a note saying that, an actual note telling them that they were gonna pay him when they closing and guaranteeing the note and so on.
Right.
So it went back and forth. Francis was uncomfortable. So at some point in time, I called him and said, "Listen, Roberto, why are you doing this?" "Well, I need to close the loan. If I cannot close the loan, I cannot pay anybody." I said, "Then why don't we do what is normal, which is you go ahead, present to the bank what is owed, get the bank to do the checks on the closing, and on the day of the closing, Francis show up, give the releases of lien, pick up his check, and we're done."
Yep.
"Oh, that cannot be done." I said, "Talk to your lender. I don't know who your lender is, but talk to your lender. That is done every single day. That's the way we do it."
Yep.
Called me this morning. "Yeah, everything is solved. We can."
Well, I didn't tell you, but he sent me, now, mind you, that the lender has been communicating with no problem. So, I get a request from him saying that the lender wants a letter from Lulu and Jessica authorizing you to receive the wires. Okay, I'm like, well, first of all, the payout instructions don't say to wire me the money. Payout instructions are to pay them directly, right into the loan paying account. That wire's not coming to me. So, I don't know why the bank would ask me. Because I know it wasn't the bank. Later on, when he asked me that question, he's like, okay, we're all set with that. The bank's all set with that.
I tell you, he's shooting from the hip all the time. I mean,
Yo me acabo de caer esta revista, I fell off the couch and everything. Ya no tiene igual, el caso de Pati hay planta y eso. El pariente está bien. Ay, me dice que lo tengo en off iCloud, qué mierda.
By the way, if anybody has like Bright House or Spectrum, you can pick it up there.
Oh yeah, because we have Bright House.
Correct. So you can pick it up for free.
Yeah, it's
There.
Tengo cosas que me tienen loco.
Pero, o sea, y
Lo
no
que-
es
lo
por-
que- lo que-
let me introduce you,
Yes.
Jorge,
How you doing?
Jeremy Gómez.
Okay.
Yo le sigo explicando, le digo, mira, Corey, no tenemos la información, o sea, el dueño no nos puede dar la información.
Básicamente dice que no le importa finance ni nada si la localización no funciona. Lo que ella no
Correcto,
quiere,
pero
sí.
como no nos quieren dar la localización hasta que no le firmemos el release, no me dan la localización. Si no, yo lo hubiera guiado yo a ella ya con tal de quitármela de encima.
Okay. Bueno, hablaste con ella when last time.
Esta mañana le mandé otro text message explicándole todo otra vez.
Okay.
Pero no está happy con eso.
No, porque ella dice, estamos haciendo esto, lo otro, estamos viendo finances y todo, y si la ocasión no funciona, entonces ¿para qué? Y sabe, we just waited.
Sí, pero lo que pasa es que nadie da release.
Wow, viste, we came early today.
Oh, oye, I'm impressed.
No quedamos mal, only ones.
Ay, mira,
Jorge
oye,
Machado.
yo dije, hoy tenemos que ganarle la batalla a todo el mundo.
No,
y
déjame-
lo hicimos por un pelo.
Déjame
Sí,
decirte. Yo
si
tenía
acá
puesta
más
ya aquí.
Mira antes que nosotros.
They always come in about 10 to 15 minutes late.
Mira,
today.
I gotta tell you, nos fuimos por el 408, la misma vaina.
Fue igual.
No, but it was better. It was hasta que until you hit I-4, then it got clear.
I
It
was like,
much-
are you kidding me? I'm gonna have to take another picture and send it to Rafi. Yeah, I need a helicopter to get there.
It took me almost an hour and a half to get here from Hunter's Creek.
You can
See,
improve.
I'm telling you. We left, I got in the car at 6 o'clock and I told Jeremy, if you're not in the car in a minute, I'm out.
Yeah.
So we left the parking lot exactly at 6:01. And it took us exactly an hour to
An hour.
get there.
Now I came up Cimarron, Goldenrod to
Allá de la
A nosotros estábamos mandando por la
De
cena.
Philip.
Una hora.
It was, but I figured
By
I can
the clock.
get there much faster.
Wow.
than
Y porque yo vengo
up to
volando.
407,
What is it, a lot
back
of
to 408
construction?
to back. I
No,
said, you
they
know,
were the traffic, bro.
Todos los
six,
boricos que
4
se
lanes
fueron
in
para acá.
Cimarron.
Exactly.
I'm
I wasn't
like,
Cimarron,
please
actually,
don't
wasn't bad.
move to Orlando
Goldenrod.
anymore.
I know.
I said take shortcut.
Yeah.
to
Pero
To bumper.
bumper
So you just
to
went at
bumper
Cimarron.
en la 408, que yo nunca he visto eso.
Wow.
No, let me tell you, 408 is getting worse,
It's
getting
the
really
construction.
bad, but it's because of the
The
construction.
Oh
construction.
my God,
It's the
wow.
construction.
Los otros días le estaba diciendo a los muchachos que alguien puso en Facebook, por favor, más nadie se mude por la... Con una foto así del tráfico, tú sabes, por favor, más nadie se mude por Orlando. I'm like, oh my God.
I still remember coming here on, it was early February 1988. And I came into the old airport. It still was not
I was
the
5 years old.
the MCO. Came into the old airport to McCoy base, taking a rented car and go 528, which was still 2 lanes, to I-4. And when I hit I-4, seeing this beautiful Cadillac Eldorado white convertible with red interiors,
Wow.
and 2 old guys on the car, one of them with a magnifying glass, trying to read the signs of the street,
Are you kidding?
driving 20 miles per hour on I-4,
Oh my
and it
That
was
was
a
a
breeze.
That was a GPS.
With a there was no
Magnified.
GPS at that point in time, but with
laugh.
a magnifying glass trying to figure out what the signs
Don't laugh. I came here in like 79 when Epcot opened up.
Uh-huh.
And at nighttime, the roads were so dark that I have to get out of the car with a flashlight to go
And
up
see
to the
the
sign and
sign.
see
Yeah, yeah.
what street am I on.
Yeah,
You
yeah.
couldn't see it.
Even I came in 1990, I moved here. and I remember all the orange farms and
Oh, yeah.
my first house was in the entrance of Poinciana, the entrance, not where Poinciana is now. And I remember there was nothing around, nothing. But it was a breeze to get to 192. In 10 minutes, I was in 192. Now, forget it.
I mean, the first time I went to Epcot, we were driving on 536, and it's like, I thought, or 536 to rural drive, and I thought we were completely lost because there were no cars on the highway. It's like, this can't be open because there's like no cars on there. So I thought I was totally lost.
No, it is, traffic is insane right now.
But now, if you want to no.
Does this work? Click, click.
No, that's a
eraser.
eraser. I may have one, but I don't know if I have it there. That's for the. You know what? My first trip to Orlando was on 71.
Ellos siguen
On my
bajando.
way, on my
Ellos
way
siguen
to
bajando de
Cali.
año.
1970.
No,
I
no,
used to
no,
buy
bien, bien.
cattle. He was a farmer, a dairy farmer.
Mira,
He
¿quién
used
está
to buy
aquí?
cattle.
¿Ustedes de la clase hoy?
Yeah.
Nori, yo creo que te iba a llamar, que
We
tenía
talk,
preguntas.
we have set up a meeting.
Ah,
Yeah,
perfecto,
yeah.
perfecto.
So,
4:17 igual, brother.
ya oí el cuento.
30 minutes menos.
So, you know, it was 1971. He used to buy cattle in Ocala. So the only way you can fly was to McCoy. So we came into McCoy. I came in on that trip with him. And we took a rent a pickup and went to
Habló con
Ocala.
Elgin, and he's open to talk, so they're meeting on Friday.
71.
They talk for like 15 minutes. Yeah.
He's open to
I
talk.
mean,
He's
Disney was on the mix, but it was still not open.
No, pero le dijo, tú sabes, this is what it is, blah, 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 y le dijo, and I think he's, you know, he says that he's ready to make a decision if he needs to, pero que obviamente he has a lot of questions, he's not unhappy, lo mismo vaina, pero he's open, so Mike, I told him, Mike, tell him that we're out, we have nothing to do with it, it's your show, you know.
Have you heard from Mike?
¿Cuál Mike?
Mike, el tuyo.
Estaba en la oficina cuando nos fuimos. Nosotros salimos a las 6.
Él ya
No, he
había
had
salido.
left. When we left,
Ya
he
se
had
había
left,
ido.
yeah.
Okay. Sí, porque Mimi lo van a coger por
Online.
She
online
told
porque
us.
ella tiene un evento esta noche.
¿El café está allá?
Ahí.
Café.
Dame
Café.
uno.
Sí, café.
No, lo que pasa es que hay algo al lado del café, ella no quiere que lo mires.
Ah, mira, qué rico.
Dale el azúcar, tía, por favor.
¿Dónde está?
Ahí, cuando ¿qué azúcar
Hay
quiere?
creamer.
No,
Pregúntale a
cups.
Laita si hay creamer.
Cups, míralos allí. Al lado.
Ay, Dios mío.
Hay creamer.
Sí, hay creamer también en la
Ay,
gavetita de
creamer.
abajo.
Dame ahí, porque es que me hace favor.
En la gavetita ahí.
Ese me envió.
¿Qué son, nueces?
Yeah, Jeremy, you were gonna say that to Dennis.
Line in the front?
No, that's the medusa.
You
That's a
did.
Medusa.
You did.
From Versace.
Yes.
So I can't look at your feet or I can turn to stone?
I talked to her, says he knows where they are, what he's doing in the morning, because he has exhibit A, which is gonna be with us.
¿Cuál será
He
este?
never changed it.
I changed
¿Tiene
it.
agua?
I hope so.
No,
No, esa yo voy a quemar ahí. ¿Dónde están los creamers?
Bueno, eso no. Vamos. Karina, ¿no has visto a... ¿Se llama?
Where's the creamer?
Ay,
María.
sí.
Aquí está Lisa.
Igual.
No, ahí.
No la he visto porque aquí le he llamado un par de veces.
Se pega.
Le he llamado un par de veces. Y ella ahora está trabajando full time. Pero ahora ella está full time. Ella hace todos los días. Entonces por la mañana estamos en la tarde.
Sí.
Desde que Piñé murió,
Al
pues,
número del día,
ella para ayudarse económicamente. No nos hemos podido ver.
Sí, sí. No, y es él porque sale la voz de él y todo.
Mami sí, mami la ve más frecuente que yo.
¿Y tu papá cómo está?
Con 50.000
No me
achaques.
mandaste los lotes todavía, ¿verdad?
Los dos los tenemos.
Mami
No,
va a cumplir
los
ahora 84.
No,
Ok.
porque estoy negociando
¿Y tu papá tiene?
Pero yo le vengo el
Para
papá.
hacer una propiedad que es
Imagínate, no puedo dejar todo solo.
Que es excelente.
Los
Así
hombres
que
solo
esa
juegan
persona
mucho.
para que la vieja se sienta
Muchos años.
No, aquel me dice,
Pasa que la diabetes
mamá,
acaba con
yo
él.
he estado limpiando, pero yo no limpio
Sí,
así
de
como
verdad.
limpias tú.
Ahí ve que el peso-
5 minutos antes de salir para el aeropuerto,
Oh,
dice,
wow.
para no irme la boqueta. Y yo
Entonces
estoy
es
con
duro
él, para
porque,
decir,
¿sabes? Para mi mamá bregar con él. Pero así él maneja,
Sí.
mira, ahí hay un
Desde
le
la
hace mecánica al carro, mapea en la casa. Ellos no pueden sacar una
Ok, vamos a empezar.
Pero
Terminen con el café.
cuando no me pasó el café,
porque yo me voy con mucho.
le han operado 14 veces de los ojos.
De verdad.
Ya el doctor le dijo que esta era la última vez. Me come la retina.
Ese es mi color
Lo
natural.
tiene ahora.
Pero por causa de
La diabetes.
Papi, esto come todo por la
Es
natural. Yo no sé qué tú hagas.
una enfermedad bien.
Papi, voy a abrirle la puerta a Tito.
Es más, para decir, para como él la tiene, aún si es un pequeñito, lo va a estar súper bien. Entonces hay gente que como bueno que él está en diálisis, gracias a Dios, poquito.
Entonces la
Él
sala
no se
llena de
puede cortar ni nada porque no se le sana. Por eso es que le cortaron las piernas. En las dos le dio que por una uña del pie.
Pero ya se lo olvida todo.
There's no problem.
Entonces empieza a sacar la
We ask that.
Yo estoy todo
Le sacó la uña.
limpiando alfombra, limpiando
Ya
No, yo no tengo alfombra. Bueno, la alfombra de Jafi, cada vez que vaya Jafi, cuidado en los periodos.
But we won't see them. They see
You
us.
won't see them, but then we can work.
Pero nada, ahí está, como siempre, en la iglesia
¿Todavía están con Mariano?
y... No, porque como ellos viven en Poinciana,
Ah, ok.
se buscaron una iglesita más cerca
Más cerca,
también,
ya.
tú sabes.
Jorge.
Pero cada vez que Mariana se dan, yo compro yo.
Ujú.
No, ese no, que se recorta este.
María, lo último que mami me dijo es que está acá con los nietos.
Sí, sí.
Son como 8. Entre todos.
¿Cómo se le pone agua a esto, Lisa?
La nena,
Voy ahora.
la nena grande de Jenny, ya tiene 2 hijos. La
¿Cómo que se llama ella? La grande.
Sí,
No se olvida el nombre.
sí.
Segundo pregunta para votar. Déjame echar traerte agua.
Lo tiene dos.
Tiene 2 niños y el grande de José, yo creo que también ya es papá.
Si no se ve famosita.
Y José, como siempre, sale a todo tiempo.
¿Crees que esto es un pan solo?
A cada rato me lo encuentro en una de las temporadas. Cuando está bien, está gordito, rosadito, lo más bien. Y otras veces lo veo por aquí.
Sí, qué pena.
Esa ha sido la carga de María.
Sí, sí.
Sí, pero ni me lo miro, me lo lavo.
Bueno, that's a way to go.
Para ver la vida, porque la hija.
No, nada, absolutamente nada.
Suelta, no es mala influencia.
Yo no he hecho nada, yo no he hecho nada.
Te conozco.
I haven't done anything. Sí, ¿verdad? Sí, me está costando el
Debería tener un club
botellita.
de esos grandotes de agua.
Un jog, un galón.
Vamos a comprarle una de capuchino a Rafi.
Que ya funciona el...
No, le echamos agua y no.
Pero ya aprendieron. Dale
Hay que
tiempo
esperar
caliente.
ahora.
Tiene ahora que calentar.
Ah,
¿sabes?
verdad, no es biónica.
Okay, so while the water builds up and we get ready, let's talk a little bit about where is Yuri?
Aquí.
Take the head off.
That was
Beat the head,
great.
take the head off.
That was great. Where's
¿Estás-
Johnny?
estás-
¿Será que estoy más flaco?
Ah, y eso mismo es.
think it's a combination of the loss of weight and the low-key profile.
Yes, yeah.
No Miami, no Miami.
You're in
Not a
construction.
flashy guy.
You're in construction, no real estate.
Yeah. Okay, guys. Today we are going to talk about commercial financing. Not necessarily the way that you may think that we're going to be talking about commercial financing. By the way, she's a mortgage broker.
Not by choice.
The truth comes out.
It's by imposition, which is different than choice.
Residential or?
Yeah.
Oh, you passed the test?
Many tests.
Yeah. So what we're going to be doing is, hey Mike, how are you doing?
Mr. Rafael.
How are you?
Mike
We
Torgan.
beat you, we beat
I
you.
know, finally.
Okay, so what we are going to be doing is we're going to be talking about commercial lending and the products and the ability that we have to bring the transaction to fruition, which is the most important part for commercial lending in this respect. Let me tell you why. No matter how much work we do on commercial, getting all of the due diligence in place, getting all of the properties online for the client, if we cannot close, we do nothing. So at a very early stage, we learned that to do commercial real estate, we have to have a significant source of financing that is enough broad and enough tailored to the needs of the clients if we want to be successful. And that's where Jorge comes into place. We know each other for many years when he was on Banco Popular and other institutions, but for the last 5 or 6 years, Jorge has been on GEMBIS, which is his own company, and we have partnership on doing this process of financing for commercial and lending and so on. Very commercially specific. We through GEMBIS we don't do residential. It's commercial. So what we're going to say today apply only to commercial and apply to the programs and the abilities that we have that have proven to be successful to close deals in many ways, shapes, and forms, and doing it in an effective way, not only for the client, but also for in terms of the closing, that we will be able to get the property or the closing to fruition without many of the problems that typically you have on the process. Peculiarities that Jorge has in the operation that are typically not common in commercial is that Jorge, in most of the cases, do not only the process of the application with the client, but also do the whole process to the closing, which facilitate the process for many of our clients, because depending on the type of loan that we are doing, it has peculiarities. For example, the SBA loans and so on require a lot of things that the typical lender is not 100% aware and is not 100% effective in doing that. So with that introduction, and obviously the fact that Jorge has been on the business for a long time, in addition to being on the business, be careful with the cargo.
Yeah.
In addition to being on the business for a long time, Jorge has a set of experiences in the past that are interesting because he has been on both sides of the equation, and that gives him a unique perspective. So with that, I want to leave you with Jorge. Jorge will take over, and again, we have, in addition to the people we have here, we have the New York office, which is right now looking at that. So, and they will refer questions to me through the phone, and I will let you know. So let's start.
Well, thank you, everybody. It's good to be here tonight and see all of you. I want to start out first. I'm not going to teach you to become lenders. That's not the purpose of this. The purpose of this is to find out how to use some of the loan products to help you sell more real estate and to move it faster. So, with that, The company name is Gembis. And just a little quick bio on myself to say who's this guy. But essentially, Gembis, my company's been around going on 6 years. It was 5 years in October last year. And I started it after over 30 years in the banking industry, running lending groups for, most recently, before starting the company, I did all of business for Fairwoods Credit Union, a 1.5 credit union here in Orlando. They were trying to get into business lending, couldn't do it. They brought me on board and basically created everything that today, if you go over there, anything they do with business lending, business products, I put together that program for them. Prior to that, I was with Banco Popular. Banco Popular brought me to teach the branch managers how to do business lending. And then after that, I took over the business lending unit, and we did all the lending here in the state of Florida. I grew up in New England, a town called Bristol, Connecticut. I'm sure nobody's heard of it, but you've heard of ESPN. There, I worked for several institutions, but most notable, a bank called Bank Boston, which most of you probably heard as Bank of Boston, became Bank Boston, became Fleet Boston, became Fleet Bank, became Bank of America. Okay? There, we ran the lending I ran the lending group for the markets of Connecticut and Western Massachusetts, all the major cities where it was harder to do deals. A lot more business, but it was harder to do deals. So that is my background. And while I was competing with lenders, I learned many things about my competition. First of all, bankers are lazy. No ex-bankers here besides myself, but they're traditionally lazy. Why is that important to you? Because if the deal is complex, they rather turn it down than work it. Okay? We don't let them do that, and I'll explain later. The other thing I found out is that while all of my competitors say they do all these business loans, they really don't. They lie to you. What every institution does is, depending on who is in charge of their approval process, typically called chief lender, chief credit officer, whatever he's comfortable with, those are the only loans they're going to do. So if he comes from a background where he had been doing shopping plazas, he'll do shopping plazas all day long, but everything else he's probably not going to do unless it's the best of the best of the best. Okay? But you as a consumer have no clue what they like to do, and they don't tell you. And once you apply, you're not going to know till like 30 days later whether they even liked it or not, and whether they're interested or not. So they're going to waste a lot of your time. So the trick in lending is to move them quick and to know what institution likes what type of deal, what are they really doing. So if this guy likes only shopping plazas, that's all we bring them. If this guy likes apartment buildings, that's all we bring them. Okay, we know who they are.
What's your favorite?
Well, I can't really say a favorite because, believe it or not, there's probably over 50 different types of business and commercial loans.
Okay.
And for each one of those, there's probably, I keep at least the top 3 to 5 real good ones. But there's probably 60 in that arena. So I really don't have favorites. My favorites are the ones that do the deal, move it quickly, and are consistent in their process. That's what we look for, so that it's smooth for your client, smooth for you to move deals. So that is my company.
Star Wars.
Star Wars, yeah.
That's to keep you awake. I learned that a long time. I had to ring a bell or do something. Okay. These are the lenders, and a lot of people think, oh yeah, lender, the banks. But there's a lot more of the banks. The banks are just one tiny little player. You have banks, you have credit unions, you have direct non-bank lenders, you have secondary market conduit lenders, you have private lenders, you have hard money lenders, you have specialty lenders. So all of those lenders are available for particular types of products, but the majority of folks just know banks and that's where they go. But as you see, they represent only a small segment. And out of all of these, only the banks are regulated by the FDIC. So they have to follow their rules as well. Credit unions are regulated by NCUA, which is a little like the FDIC, but they actually are a little bit more flexible. And you're going to laugh when I tell you why they're more flexible. They're more flexible because they haven't been doing business loans for a long time, They don't understand it. So they're just learning it. Okay? I first audit that these guys did, they brought like 15 people, but nobody knew business loans. So whatever I told them went. The next year they brought 5. After 3 years, they gave up on themselves and they hired guys from the FDIC to come audit me. So there's a little bit more flexibility because they have their own regulator is just learning the process. Direct non-bank lenders are not regulated. Neither are secondary market conduit lenders, nor private lenders, nor hard money or specialty lenders. So they all have different rules, and some have no rules. I get asked, your private lenders, what do they like? Well, the private lender could be you. You may want to do a loan, and you're going to do a loan only that you feel comfortable with, regardless of what he does. So there are no rules to the private lenders. It's my job. I know my private lenders. I struck a deal with them with what they like, what they're going to be comfortable, and that's how we move stuff. So
And Jorge, I think that it's important to mention that if you go to a credit union, and it's typical for businesses to go to credit unions for financing, obviously more than anything else when they are members of the credit union already. The problem is that the lending officer of the credit union, and Jorge works with Fairwinds for some time, the lender at the credit union knows nothing about lending. Okay? So we can accomplish a lot more with the credit unions by going through Jorge than what you can accomplish with the credit union by going directly to the lender on the bank.
or a bank, or even a bank.
Yeah, because they are completely clueless. For example, we did recently a transaction for one of my clients, Sandra Nielsen. It took him about 2 weeks to put together the deal. Before that, because she was a member of Fairwinds, she wants to go to Fairwinds. We spent 3.5 months dealing with Fairwinds,
And she didn't qualify.
and at the very last minute, Justin, the manager, came back and said, Rafa, you know what? I hate to tell you this, but take the business some other place. We will never be able to close it.
3 months?
3.5 months.
Now, if they had asked me, since I told you I started at Fairwinds, I would have told them since I left Fairwinds, they've done like maybe less than 5 deals. So, but you guys would know that. You hear Fairwinds advertising and all that, all these loans. See what I mean? Did you ever remember when you were growing up playing a game where I tell you something, you tell the her, you tell the her to do, by the time it gets there, it's completely different? That's what happens when you go to a bank or a credit union. The person who you're dealing with is not a lender. And you're relying on them to pass the information, translate what it's supposed to be to the guy way in the back that you never get to meet. He makes the decision, but he has to understand the deal, but he doesn't like talking to you. So that's, if you go in on your own, that's what's happening. Now the difference is, we actually help the lenders understand the deal by doing their job. We do the underwriting analysis for them. Now the guy who gets it in the front, he looks smart, because now he gives it to the underwriter and he says, whoa, I understand exactly what you're talking about. Yes, it meets the guidelines, and that's how we move things quick. Rafi talked about the closing process, same thing. In a typical bank, you won't get the closing checklist till it's been approved, the commitment's gone out, the appraisal's been done, the environmental's been done, and then you get the closing checklist. And that closing checklist could take you 3 weeks. Okay? With us, you get that closing checklist when the deal's approved. We put it together and give it to the lender so they can follow it correctly. And now, while the appraisal's being done, while the inventory's being done, you're working on your closing items, the appraisal comes in, boom, we close. That's how we cut like 2-3 weeks off a closing time to make a deal move faster.
And as you move through the process of doing commercial real estate, you will see that closing for commercial is completely different than closing for residential loans. Completely different. And then, even though, for example, we have an excellent closer for commercial transactions, 99% of the time, I review things with Jorge before I go to her, because
I've got the errors.
Because Jorge got the errors ahead of time.
Wow.
Just today, I was speaking to a SBA lender. That's a pretty good job. But I pointed out to them that in a particular deal, their attorney missed a critical document, and they had no clue. and I had to educate them why that document was critical. I provided it to them so that they can go give it to their attorney and said, you screwed up, you gotta do this document, and the attorney had to go figure it, and the attorney was like, because he wasn't an SBA attorney. And the bank just hired an attorney to do it, thinking that any attorney can do any closing. No, it doesn't work that way. So those are the things, the benefits that we provide to not only help the client, you'll see how we're gonna help you, and we also help the lender be able to say yes and move it quick. Lenders, the closers that the lenders say, we love working with you, George, you do all our work.
Of course.
By the way, one of the guys in New York is making a comment which I think is very proper at this point in time. I think that I talked to you all about the transaction that we are doing in New York that we find out that has some environmental issues on the property last week. Well, we haven't moved to financing yet on that property because the way that contract is handled there, because of the complexities of the deal, is that we don't have to go to financing until we have a significant percentage of the due diligence in place, so we don't lose time trying to finance something that is still 6 months down the road. But what Jorge just mentioned comes to a very important point for the New York guys, which is that in the case of New York, most of these properties that are financed by these large conglomerates of investment groups that, for example, we receive and I will bring a copy so you can show it to them. I received the Deal magazine from New York only, which shows all of the deals that happen in New York, and most of those are done by either investment groups or insurance companies.
So not even banks or
Well,
lenders, it's
they are-
private lenders.
They are lenders, but they are not banks.
New York,
Private lending, no?
Well, yeah, New York has a mixed bag. They have a ton, probably more than any other place, maybe not California, of number of lenders. Now, these of you guys know this is true. Half of them are crooks, okay?
Break your legs.
But they're in the
And we
non-regulated.
mean group.
They're in the non-regulated arena. So you're dealing with where you have no clue whether the guy you're dealing with is legit, not legit.
Oh my God.
That's New York.
That's horrible.
And so you do have some big credible players, but you also have a lot of, I can say a lot of names of New York lenders that sound like very legit names, but there's no way to know whether they're really legit or not.
Wow.
So
So
That's
that's scary.
So that's also what you have to watch out for when you get into the non-regulated, is how do you know whether they're even real? Okay? I mean, I have a nice website, but if you never saw me, how do you know that I was even real?
And to give you an idea how that works, for example, the Real Deal gives you only information on financing in the New York area. And it's thousands and thousands of deals. And the interesting thing is that they report these transactions based on the type of lender that you use and how it works with them. So for the New York guys, we do the same thing. We basically, he knows the market there, so he goes to the exact lender that we need to go to get it to work effectively. That's why we follow these on a daily basis.
So, before I move on, I'm going to walk quicker than this, but I just want to point something out.
Forget about it.
Half my business comes from banks. And now you guys are thinking, banks do a lot of loans. Yeah,
They use people like you.
they send them to me
They need you.
because they can't do it, rather than lose the client. We do it with a non-AR competitor, and they look good.
Wow.
That's why we get half our volume from them. The other half is from over 50 affiliated brokers. Somebody asked me about lenders. I probably have over 200 lenders of all types of loans.
That's all.
Okay, the first thing to understand lending and how it could help you is to understand your real estate market, that there really are 3 types of real estate products and in terms of use, and those 3 are financed differently. So once you know the type of product that you're trying to sell, then you match it up with the type of financing that's available just to that segment. And they don't cross paths. So everybody's heard of SBA. Well, in order to do an SBA, the buyer of the property has to be a business or the owner of a business, and their business has to occupy that space by more than 51% of the square feet. If they don't, that program cannot be used, even if the business is going to be located there. Okay? So essentially, you have improved real estate, which I just talked about, where it's gonna house a business. And that business has to be with 51% of the total square feet of the building, not the land, the building. Okay, so if they are gonna occupy more than 51%, the SBA program is available to them. If not, then it's not considered a business occupied property.
And it's 51%. Don't call us telling us, hey, we're close, we're
49.
49. Sorry. The SBA, they require 51%.
How do you prove that?
You go to your assessor
Footage.
card and you take a
Right.
look at the total square footage, and then you go out there and you
And
tell you
measure.
what they're going to measure it.
So it's easy to prove. So
If you go, I mean, you guys know this, if you go to the assessor card, most of the time, if it's an assisted building, they'll have a layout sketch that's pretty accurate.
To me, 49% is 51.
So,
Not to the.
I've actually done deals where we've had to measure. And on deals that were 49 and a half, I came up with a plan to overcome it.
You put a
But
little bit more furniture.
We put a desk in the other unit that's an overflow rec
Yeah.
to this business, and that's how we did it.
Wow.
The other type of real estate is improved real estate, where less than 51%
Okay.
is either owned by somebody else's business there, or it's owned by a third party who just rents it.
Yeah.
Okay, and that's called investment rental property.
They're not occupying the property.
Correct, it's a rental property. So you could buy it and it's full of, it's apartments, or it's office buildings, or it's
It's leased to other
and
people.
leased to other people, or you can have your business there, but you just don't occupy more than 51%. And then the third type of real estate is unimproved property, meaning, there's no building. Or there's a building, but the building can't be used without having it being fixed up, rehab. You know, it's not like, you know, we need to paint the walls and all that. It's basically, it's been burnt out,
Only
or doesn't meet code. So that cannot be done here, because it can't be occupied right now until something's done to it. And those are the three types of real estate. So when you're looking to sell real estate, it's either this, or this. Okay, if the only other thing that does not fit here is residential, and we don't do residential. Okay, so that is your buckets, and if you have that down, then you know now what are the financing options. And if a buyer is looking to buy real estate and you provide them, we have some options for financing, and if you do this, here's what we could do.
Are you gonna go into each one? Because I have questions.
Yep.
Right.
Okay, we're gonna talk right now quickly about business occupied properties, okay? On business occupied, I already talked about the 51, greater than 51, not 49 and a half. That means it's the banks, the credit unions, the private lenders, they all consider it as a business occupied property or occupied property.
And Jorge, so we are very clear that we get this in the correct perspective. What we are trying to do with your word
That's what I was gonna ask. Which
will
one
be exactly on this category, because
is
the
occupied.
building will be 51% occupied
But not
by
at the,
design.
no, of course, but not at the
But
beginning.
it
No,
would
no,
be that
by
your
design
case.
will be 51% occupied by your word.
If you said so,
But the
yes.
first loan will have to be rolled on first.
Yeah, but that's,
Whatever he said.
and we will talk about that later on, but
So you have to do roll on.
By
and then
design.
first one on
forget
top.
about Roland now.
Roland.
Let's
Lovely,
talk about
lovely.
let's talk
Don't
about
forget about it.
because this is important.
We cannot hear that, please.
No, and we will deal with that in a minute. But what I want you to be very much aware is that
That's the final
51%
That's the
Correct.
final
will be
loan.
the final loan that we're going to use for the
The
process.
Remember,
final one.
if
the
you're
And
gonna
end
will
build it,
allow us
It's-
to move with the program that he will be talking about now, which is what will be of benefit.
So it would be considered similar to a
FHA, that's
construction
an
to
FHA.
perm to.
No, no, no.
right.
No, that
No,
has
no.
nothing to do with that.
That's
You
an
will see.
FHA loan,
Okay.
owner occupied, 51%.
No, but so
Now,
that's the end.
if you have to build a building while it's in construction, it's
Yeah.
construction development,
Uh-huh.
and once you get the CO, now it's business.
Then you gotta
activity.
refinance
Exactly,
it.
that's what
Okay?
he said.
You gotta
Now,
do two loans.
there are some programs,
Do they convert, or is that two different loans?
it's normally it's two different loans, but there are some programs
Those are different lenders.
that allow you to do it together, and we're gonna go over that, okay?
Ah.
The first program I'm gonna talk about is the SBA, and the reason for that, there's many reasons for that. Number one, for those that like construction, they're the program that can do it together without having to be two separate loans. The other programs are not. So one advantage is that they can do construction and the perm as one loan without having to do it as two separate loans.
They can purchase the land, you mean?
You purchase the land and build the
And do the
building.
construction.
You have to do it right away.
On
Okay.
one transaction.
On one transaction, correct.
It's like a.
So that would be a
perm.
construction to perm.
That's
Construction
what I
to
said,
perm.
that
But
is
only
similar
under the
to-
7A program. There's other programs that they don't do construction.
Yeah, but one of the things that you need to do is to get off, you and everybody else, is to get off the residential hat for tonight.
Yeah, they're comparing
And-
FHA.
yeah,
forget
because-
that.
You cannot compare. These are two different animals. So take off the residential hat and listen to this openly, because you will get a lot of information today that will help you on the deals that we are trying to put together.
And we do have a
Yes, sir.
residential type property but not occupied program that we're gonna talk later.
Oh my God.
So on the SBA, the reason I'm bringing that up is in each segment, I'm gonna talk about the best
Sure enough.
program available for that, and then work my way to, not the worst, but if it doesn't meet the standards. The other reason the SBA is a great program is because it can do up to 90%
Really?
financing.
Wow.
So if you go to a regular bank for a business occupied loan, the maximum they're gonna do is 80. But if we do SBA, we can do up to 90%.
What is the maximum?
90%.
90%.
No, the
Maximum
loan
loan
amount.
The maximum loan amount under this program is 5 million.
So we're good to go then.
We're good, we're good.
The reason I say 85 to 90 is because specialty properties that are unique, that can't be easily used for something else, 85% would be the maximum. Okay, but
Like a car wash.
like a car wash, correct. The way that works, SBA does not do loans. And that's actually not true, but for this purposes, they don't do loans. They just guarantee loans. They guarantee a loan to a lender. So that lender may be a bank, it may be a credit union, it may be a non-bank lender,
Yeah.
okay? But the lender has to be willing to do the loan with the guarantee. So just because the SBA says, oh yeah, you're eligible, does not mean you automatically can get a loan. The lender still has to be willing to do the loan with the guarantee. The other good thing about SBA program is that you get the longest term, 25 years. The longer the term,
Amortization.
the more that you can afford,
Yeah.
okay?
Heard that?
So,
25 years?
Yes, it could be.
That is this is one of those things that will make or break a deal.
right.
Of
A normal
course.
bank may do this at 20 years, that extra 5 years may allow that deal to
Gives
be
you the
done.
ROI that you need for everything. And it's
Of course.
and it's unique of SBA.
Correct. SBA is what I like to call a stress-free loan. And I know to the normal people out in the market, they're like, SBA, that's a lot of red tape. It's only a lot of red tape if you don't do it with me. But it's a stress-free loan because a lot of people who've never done commercial don't realize this, but in a normal commercial loan, there are things called covenants. Covenants are promises. Promises, you promise to do some things and you promise not to do something else. You break one of those promises and the bank can call your loan tomorrow. Or the bank can jack up your interest rate, or the bank can demand you put up more collateral. The SBA program says, no. We give you the guarantee, Mr. Lender, but as long as the client is making his payments,
It's
the
good.
world could
Terms
blow
cannot
up
change.
and nothing, you cannot call their loan as long as they're making the payments.
So they
So
cannot, they
what are
cannot
those
accelerate
covenants
costs.
or those?
Typically, the hardest covenants typically is that you have to earn a set amount of money. Your cash flow has to meet all your obligations by a certain ratio. And if it doesn't, if your business takes a loss, your loan can be called.
Really?
This says, doesn't matter if you lose.
But not SBA.
SBA says you can lose $1 million, doesn't matter, as long as you're making a payment,
We
you're
did a
good to go.
transaction at a shopping center in Miami 10 years ago, and they lost the principal tenant, and 3 months later, they lost the property because the
That
bank
was part of
called
a covenant.
So it's like an acceleration clause.
Correct,
it. Yeah,
yes.
in essence.
Mhm.
Like a dual
So, another one is, if you don't give me financial
Yeah, I'm
statements,
gonna pass that test.
if you don't give me your tax returns and the financial statements, that is whatever they want, certain amount of time, they can call it. Before I left Fairwinds, as I was training some of my guys who were gonna take over, and I let them do what they want, cause I was going to do this company, they took, they took a 15-year customer, had never missed a payment on a commercial office building similar to this, and they called their loan because they couldn't get the financial statement.
Oh, wow.
Okay?
Wow.
A $1.5 million loan because they couldn't get the financial statement. And I was on my way out. All I said is, you really want to do that? They've never missed a payment. They've been with you for 15 years. You have plenty of collateral. Why would you want to do that? They did it.
They're evil.
And sometimes it's not that they are evil, but sometimes it has to do
That's
with the portfolio that the
It
bank
makes sense,
has.
they need to sell it, they need to sell it.
Yeah, because some banks,
No,
and
maybe
we have this
They have too much
situation.
equity and they wanted the building.
No, and simply they suffer changes. For example, when they sell the Kissimmee Bank,
Centerlink?
Harbor.
no, the other one,
Well,
Center State. One of the things that they did is they called me on 2 loans that we used to have with the bank, and they said, you know what, we cannot hold these ones on the portfolio anymore, so you have to get financing
We don't,
in a matter of months.
our floor can be taken away anymore.
Correct.
On SBA, on
No,
that
no,
one,
no.
normally are you going to banks or credit
They basically tell
unions?
you have to pay off your loan.
It depends on the circumstances. The majority of
You
the-
make that decision.
Correct, depending on what the industry is,
Uh-huh.
what the type of building is. Remember I said at the beginning, depending on who's the head credit guy,
Uh-huh.
they either like this type of building or that type of building, or they like this industry or they like that industry. So if it's a daycare, I can't take it to a SBA lender that hates daycares, because they'll never approve it, right? Regardless if it meets all the criteria.
So you look at the
Discretion.
concept
Yeah.
of
Yes,
the
the
business,
I
and
look
then
at-
you
And
decide
that's
if it's gonna be
how
credit
it's
union, bank, or whatever.
Correct, I take a look at the project, what type
No, it
of
would be
industry,
just
what
back
type
to
of
credit
building.
union.
Now I know
Private
which of my
lenders
lenders
are
that
SBAs.
like that product.
Exactly.
Only banks and credit unions do SBA, of course.
No,
Private
No.
lenders do SBA?
they're non-bank lenders do SBA. Not, certain ones of them, and I've got them, okay? Like for instance, one of the biggest SBA lender of all time used to be somebody called the Money Store, remember? The Money Store?
No.
Nobody heard the Money Store?
Oh,
Never.
come on.
If you're from New York, the New York guys heard it because
All the time.
they were
The
in New
money
York all the
store
time.
is-
They were the number one SBA lender.
It was a store with money in it?
That's the answer,
I like
No.
that. They were in all the malls?
The Money Store,
Como con el hotel.
the Money Store did a ton of loans, and then they got bought out by First Union, which became
That I
Arcadia.
know.
We heard for
That I know.
that.
Within
Wells
2
Fargo.
years of First Union buying the Money Store, they shut it down because they didn't
There
like
was
the
no money.
portfolio. They didn't like the portfolio, all the type of loans.
They look weird.
It wasn't the type of loans that First Union used to do when they got in this portfolio. Daycares, this, that. No, we don't want it. So they said we're shutting it down.
Wow.
So
What are the requirements you put in there that all owners of 15% or more?
correct. The
The personal
SBA,
guarantee, is there requirements to the owners?
the SBA requires that if they're going to put a guarantee, the owner's going to guarantee.
Personal guarantee.
Personal guarantee, unlimited. So there's one owner, the whole loan. 2 owners, the whole loan. 5 owners, each one the whole loan. That's what an unlimited guarantee means.
We're messed up here.
Okay.
Right.
So unlimited means anybody, and in commercial, unlike residential, if the loan gets into trouble, I don't have to foreclose. I can go after you personally on your guarantee and ignore the collateral. I did that trick to some attorneys up in Altamont Spring who I had a little loan, then they had a big loan. They don't want to pay me my little loan because they were fighting the big loan. So I told them, no problem, I'm just gonna sue you guys directly and then see how much business you guys are gonna get. You have to check tomorrow, George. So, unlimited guarantee means
Anything,
100%. SBA will not guarantee if the owner doesn't, the owner of the business doesn't stand behind his business, the SBA will not.
Of course.
Now,
What's the
Jorge,
difference between the
let me-
504 and the 7A?
We're gonna talk about that now.
Oh, sorry.
Let me, before we jump there, let me give you a scenario,
Yes.
which is something that we have been talking about. G-Word, which is a residential real estate company, is planning to franchise their concept.
Yep.
The way they're franchising the concept is they are opening a satellite office, which will be handled by a local broker on that satellite office. And G-Word will be the real estate owner of either the property or the lease agreement that the property has.
Mhm.
Okay? So, how can we fit the 504 program in a situation like that?
Well, before I talk about 454, the last thing I want to say about the 7A, there are two programs that everybody hears in SBA, 504 and 7A. And there's actually a gazillion other ones. We don't have to worry about all the other ones because all the other ones are really the 7A by a different name. For marketing purposes, like women-owned business or veteran-owned business or handicap-owned business, all the 7A. 7A is the most flexible program the SBA has. It's meant for businesses that are either startups or young, which means they've been in business less than 3 years. It's for businesses that have erratic results, as opposed to consistent results.
Risky?
Inconsistent. They lost money this year, they made money this year. Their sales were up here, then down here, then up here, okay? The 504 program is completely opposite. This is meant only for established companies. This is not meant for startups. This is not meant for erratic companies.
504.
The 504. The difference between the 504 and the 7A is that the 7A is a lender makes the loan, SBA guarantees the loan. In the 504, there's actually two loans. The lender only makes half the loan. They make the first 50% of the purchase price in their first position. So to them, it's a no-brainer. Hey, I'm 50% loan to value. I'm going to give you a 10 or 20-year loan with a rate that's going to adjust every typically 5 years. That's your typical 504 first part of the loan. The second part of the loan is a junior second mortgage, and it's funded by a bond, a debenture that the SBA sells. And so, because this is funded by a debenture, we're going to talk in a second, it's a long process. So if you need to close this deal quick, that is not the program, because that's at least a 2 to 3 month program. Okay? But the beauty is, again, you can do 90% financing and only 10% down to your client. And you get the best rate in the market on the 504 because the lender is only at 50% LTV, so he's going to give you a very good 5-year adjustable rate, probably today 4.75, 5%.
That's good.
The venture is a bond, so it's priced like a bond. Today, I think the last one closed at like 4.8, and that bond is a 20-year bond. So that's a fixed rate for 20 years on the second portion. The first portion is an
It's not
adjustable
fixed, yeah.
every 5 years. But the net result is between the two of them, you're talking about probably an all-in rate under 5.5% for 20 years.
On average.
On average for the SBA for a commercial loan. Now, the way it closes is you have to close the loan, sign documents, and then you ship all the documents of the bond to a bond attorney who does it for every other loan in the state. And then they sell one master bond that funds on the 15th of the month. And so in order for that attorney and his people to review every package that goes for funding, he has to have it in his office by the 30th of the month before. He needs 2 weeks to review the documents that they were done correctly, and it qualifies for the bond, to certify it. So what does that mean? That means that if you closed on the 2nd of the month,
It would be a
you're not
third.
funding till the following month on the 15th at the fastest.
Like a month and a half.
A month and a half from when you sign your documents. So that's why it's a long process. It's a 60 to 90-day process. No construction allowed, and it's only for real estate and for your world. It's only for real estate and equipment. The 7A is for real estate, equipment, and other uses. This is only for real estate. So if you have a solid client, you say, we can get you 90% financing with the best rate if they don't have to close super fast. But that means if you go that program in your contract, you have to allow for a long closing. Don't be putting a 45, 60-day closing date because you'll never make it.
Now, Ellen, you understand why we are letting Alvarado know that he needs 90 days on due diligence and so on, because what we are thinking for Alvarado is this.
This one here.
So that is the 504. Benefits to you, again, like the other SBA, 10% down, 90% financing. But it's got to be an established company for this program and a long lead time. Or you can do good companies with the other program also, and it's much faster closing. Okay?
Also 90%.
Also 90%. Right. The other, you don't get the fixed rate with the other, but outside of that, relatively, it's about the same cost, but it just moves faster. Okay? This one other thing that's different between this one and the other you should be aware, this one has a very steep prepayment penalty. You won't be able to prepay this puppy for about 7 years. It won't be worth it.
Because of the bond.
Because of the bond.
It's a lien.
While the other one, the prepayment is typically 3 years, maybe 5. And it's reduced at 54321.
Is
So-
there a loan amount minimum?
Imagine the
and
40%.
maximum?
The minimum loan is 150,000 and the maximum is 5 million.
So 150 is the minimum.
Correct. Now there are programs that will do less than 150 under the SBA. There's only 3 players and they're very slow. Okay? So if you can do 150, you get to go with a faster player. At 150 or less, the SBA at this moment pays your fee for you. Over 150, there's the SBA guarantee fee there. So SBA, 90% down financing, so your client only has to have 10% plus the closing costs. And here's the beauty, another difference. On the other SBA program, the lender will lend you the closing cost. Not on this one. So if your client only has about 15%, 10% down, and the lender lends him the closing cost, post-closing is gonna have a little bit of liquidity.
What is the average closing cost on
On every loan is about 3.5.
Commercial.
On every loan is about 3.5%. If it's a
residential?
same as residential, if it's complex, it could go
Lower.
maybe up to 4.5.
Okay.
But it's the recording costs are identical to residential as commercial. The doc stamps are the same, just the numbers are bigger. Okay?
Fair value.
But that's without your fee,
Uh,
on the 3.5 that you're saying for SBA.
not necessarily.
Okay?
So some of these programs, the lender pay me.
I see.
So you're not paying me.
So it depends on the program.
Correct.
Alright.
And SBA is one where you guys don't have to pay me. The lender pays me. There's a gazillion lenders, they're all dying for my business. Okay? So that's the program if somebody's looking to house their business, you got a way to do 90% financing, so they have 10% plus some closing costs, you can get them into a building.
That's good.
Okay?
And it's almost impossible to get 90% any other place.
Yeah.
Then
Never-
an SBA, right? What is
The
that?
SBA is the only way. Okay, we actually talked quickly about the SBA, so I won't spend a lot of time on this, but again, it's the most flexible program,
7A.
the 7A. The process is 45 to 60 days, and I make it be closer to 45 with the things that I do to move the lender ahead.
Faster.
Correct? Okay. The other thing, it's neither here or there, but I only work with lenders that have achieved a designation of PLP. What that means, think of it like FHA. You're sending it to only an underwriter that's approved by FHA, so you don't have to go to have a third party get involved in that. So that also, that in itself, compared to a non-PLP lender, a non-PLP lender, you gotta add at least another 2 to 3 weeks on the same process.
The 7A and the 504, either one works for the program that you said where you could also purchase the land and build?
No, 504 does not do construction, so 7A is the only one.
It's only for buildings, so we will
Correct.
be on the other.
Correct, the other one is only for built buildings.
Already
Already.
existing.
Correct.
established.
Yeah.
The only difference is that the 505, the junior,
And the 25 years is, sorry,
it's fixed. This one is not. This
Correct.
one is.
the 25 years is amortized, right?
Yeah, these are fully amortizing loans, no balloons.
There's no interest only,
Well, yes and no. If there's a reason to do interest only, on the 7A, typically you'll get 3 months interest only, maybe 6 months interest only.
at the beginning.
Correct.
Then it goes into PITI.
Correct. Correct. I just closed a hotel loan, where part of the money we were funding was to do improvements, to fix the rooms. So we did interest only 6 months, and then it rolled after 6 months.
What was that one though?
That was 1.4 million. Correct.
Like that.
And what are the interests normally running right now? Just on an
Right
SBA?
now, right now it's because our
Because of Trump?
because of Trump. Now they want to say it, but
You can say it,
Going
you
up.
can say it, you can say it.
interest rates have gone up almost 1% over the last
Oh,
year.
yeah.
year and a half.
Everywhere.
We know, in the residential we know, but in
So-
the commercial, I don't.
But it doesn't go as fast up as residential as it does commercial. It's dollar for dollar. So right now, the SBA loan's at 7%. A year ago, it was at 6% was the maximum rate.
Okay,
So
well,
commercial's always higher, a couple points more than residential.
Yes, at least 2 points.
Well, the 704, the 78, because 504, you said it's an average of no more than 6%.
Correct, about 5.5 because of the banks are so low
Yeah.
versus the other
There
one. So, conventional bank loans. So we talked about the SBA, now we're gonna talk about a conventional, which can be offered by a bank, credit union, or a non-bank lender. Okay? Only up to 80%.
Which is that one?
This is, call it a bank loan, what you guys would consider a bank loan, but it can also be done by credit union or non-bank lender. They will only do up to 80% on business occupied properties, although banks and credit unions think there's a magic pill with doctors. So if you're a doctor, they do 85%. And by the way, this presentation is on the website.
Yeah, it's on their website and everything.
Oh, I like my pictures.
But
Um,
Tia wants the pictures, you know?
Now, if it's a special purpose building, which we talked about before, typically 75%. Church, temple building, a banquet facility, a motel, self-storage, restaurant, golf course, like banquet facility. I just financed a $1.2 million banquet facility in Tampa. They were only gonna get about 70% through this program. We did it with the SBA, and we did
Less.
85% financing.
Why is less to them? Any particular?
You can remember, the SBA is guaranteeing the lender's loan, here is not, okay?
More likely.
They're gonna be shorter loans. The loans are only gonna be about 5 to 10 years, and typically with a 20-year amortization, so there's a balloon that's due at the end of 5 to 10 years.
It's gonna be expensive, huh?
That means if you get a 5-year deal, you're gonna be refinancing every 5 years. And you're not getting the extra 5 years on the SBA, it means your payments are lower, you can afford more. Okay? These loans, again, have a typical loan origination fee of 1 to 2%. The SBA does not have an origination fee. Instead, they have a guarantee fee, and it's roughly the same, it's about 1.8. So they say, bank, you can't charge this fee, but you pay us a guarantee fee. So it's the same thing. Again, process 45 to 60 days for this type of loan. Unlike residential, appraisal environmentals typically are not done until the loan's approved. In residential, the appraisal's done before the approval. So you gotta bear that in mind when you write your contract, that you have to allow for that appraisal, and a commercial appraisal runs 3 weeks. If you pay a premium, you can get it done in 2 weeks, but typically it's 3 weeks.
And please notice that it says appraisal and environmental, as we talked on the last weeks. Environmental is a most on these loans. There is no way to get a loan without a phase one minimum.
Then the loan starts.
Right, and Rafael is the commercial guy, but I'm talking a little bit about something you make sure you put in your contracts. Because I see a lot of realtors try to do a commercial deal on a residential Florida contract. Bad
It
idea.
doesn't work.
Bad idea, okay? And the reason it's a bad idea is because on a contract, you want to put in that contract a due diligence period and spell out exactly
Protect.
everything of the due diligence. An environmental has to be done. Who's gonna pay for it? If it's a commercial condo, who's gonna pay for the condo docs?
We put the
Who's,
seven.
all that, if you put in the contract, it's done. My wife just closed a deal where it almost fell apart because of, I know she's here, a $60 charge that did not get put in the contract, and at the table said, if you don't pay, I'm walking away.
I'll pay $60.
Correct. So, put the due diligence
Who's
right up front,
responsible?
who's responsible, and that the clock doesn't start until you have the due diligence period. Don't just rely on the financing contingency, you have a due diligence period, then you have a financing period, then you have the closing.
And if you remember 2 weeks ago, we said that we don't use even the commercial contract that ORA suggests because of the limitation of the contract. So we have several contracts that we have paid lawyers to put together, but if the transaction is a transaction of $1 million or more, and it has some peculiarities, what we do is we draft the contract and send it to the lawyer and said, listen, we need you to review this and get us a final document. It's of superior importance to do it that way. Don't get into the trap of using the small commercial contract on ORA. Is not good.
And of course, the lawyer is gonna charge us.
Yeah,
But it's
it's
fair
it's
compared to the risk.
I had a
Who
deal,
pays for that usually? We do.
the client does, the
buyer.
board has its own attorney. But nobody should buy commercial real estate
Without
without an
an
attorney.
Yeah.
It's plain Russian roulette if you're not. I had a closing where we got to the closing, the title showed that it was a refinance, the guy had built a plaza on 5 parcels.
Listen, you're.
And when they did their deed and they did their financing, they missed a parcel. Okay? So we couldn't close until that additional parcel was deeded correctly to the owner. The problem was the company who sold it went bankrupt
No.
and was being chased by 1 million creditors. So how were you gonna get somebody to sign who's gone bankrupt? So his deal came to a complete halt because I said, who's your attorney? Where's your title policy?
Nobody knows.
I didn't use the attorney, I used the title company.
Oh.
And they didn't sell him a title policy,
Oh, man.
okay? So always get the owner's policy, it's worth it, and use an attorney in commercial. The next product I wanna talk about, which is one of my most popular products, and you're gonna understand why, it's called a stated real estate loan.
Stated.
Stated, which means,
I don't like that
which
word.
means that the owners do not have to show their tax returns,
Uh-huh.
okay? And on a business occupied, we'll do up to 70% on a non-special purpose type property, okay?
30% in.
So if somebody has 30% down, for whatever reason can't or don't wanna show their tax returns,
They're gonna lose it if there's something wrong.
we can do that stated loan program.
Love it.
And the owners must have a minimum credit score of 650.
That's it?
Which is not that.
So if they can supply copies of the rent roll, copy of leases, the credit score mid-50, and they can put 30% down, we can get them an approval in 5 days.
And by the way, an important element in that is that the rent roll, it's important that we review it before we process a case. You cannot believe the amount of garbage that tenants get with the owners. And then when we get to the point of approval and we find out that there is nothing that we can do.
if we can act ahead of time with those leases, for example, right now we're putting a deal in Tampa of about $3 million. I'm redoing of the 9 leases. I'm redoing 6 of them in order to be able to go in and do a decent financing. So you have to have that in mind.
If it's business occupied, you should have a lease, proposed lease for the business. And the business may be asked to show a financial statement, but it's stated, not tax returns, it's stated, just has to show profit. So if it meets that criteria, we can get them a conditional approval in 5 business days, subject to the appraisal.
The due
Something.
diligence.
And instead of an environmental, what my lender's gonna do is going to issue environmental insurance. So if it can be approved for environmental insurance, which will take us 3 days, it can be done.
Well, the insurance, I imagine they're gonna do their due diligence to make sure that there's no.
No, what they
nothing
do
wrong.
is, you remember that Shannon told us that she has a way to know what have happened with that property in the past. They go in, they do that, and then they
Look at the
assign the risk to the policy and sell you the policy.
It might be expensive.
So that way, they are covered in the event of not having the
The
faith.
Is
policy is gonna be a one-time charge at closing, and it's gonna be either $1,450 or $2,400 more or less at one time at closing, which is about the price of a phase 1 environmental. So,
Do you recommend that?
so this is a very easy program, and I have it here in business owner occupied. It's a 30-year loan, fully amortizing, with a rate that's fixed for the first 3 years, and then becomes a 1-year adjustable after that, from 7.99 to 9.5%. Remember, we're not seeing any of your financials on
It's
this.
stated.
This is stated, okay? And you're getting an approval in 5 days, and we close it in 30 to 45 days. We close it 7 business days after the appraisal comes in.
Is there specific businesses that
This-
would not?
The only thing that cannot be done in this, it cannot be a special purpose building. So any type of retailer, office building, converted house, could be done for,
Warehouses.
it could be done for warehouses, it could be done for single family, 2 family, 3 family, 4 family, an apartment building, a box building, cannot be done for a gas station with tanks, but it can be done for convenience stores that they took the tanks out and it's clean. So, it is a beautiful program because not only can it be done for a business owner occupied, but it can also be done for rental property. The same process, 5 business days, you have an approval.
They just need 30%.
They just need 30%.
If the land is free and clear and it's a 30%, they don't bring anything?
Well, this is only buildings.
Right.
Right. So if they have 30% and it's a rental property, it just copies of leases. And in fact,
Oh, okay.
It's not for construction, it's
No,
Correct.
I wasn't thinking that.
so, I don't have it in a presentation because I know you guys don't get, this is purchase of real estate, but I should have because it is pertinent to you guys. Another beauty of this program is that it's the only program that you can get cash out of your property. So if somebody has a low mortgage, we will do up to 70%, including cash out, on a refinance, which then allows that person to buy another property from you. So that's a way of leveraging more business.
So popular loan?
Correct, it's very popular. Both on the business side and on the investor
People
side.
from overseas and stuff.
However, not everybody knows how to do it.
Or picture
Right.
right.
Remember, they gotta have a mid-score 650. So with the application, I tell them, get your credit bureau report from Credit Karma, which is free. And then you'll know right off the bat if you meet the minimum or not. Okay? Don't forget, the cash out feature, if you're dealing with somebody who's buying multiple properties and wants to buy more, if we can refinance the property to cash out to buy more properties,
Keep it going.
you keep it going, you do more business.
Ahorita estás en residential.
We had it in residential until
I know.
Yes, we
Don't listen to
until somebody decided that
him. Yes.
DP should create a way to protect the investor in Wall Street,
Yes.
and
Oh, we know the story, trust me, we were in the middle of it.
I used to do residential in Connecticut. Stopped doing it when they
Back
changed,
then,
when
back
they changed,
then.
when they changed the rules, stopped doing it. Okay, we do have private and hard money, they're not the same thing. There are hard money lenders, some which are companies, and they will lend typically up to 50 to 65% on the real estate, with a building on it. Very few will lend on land. I do have one that will lend on land nationally, we're talking construction. But hard money guys only care about the value of the real estate. My private lenders they will have more flexibility of the different types of properties they will do. But again, they'll only do up to 65% of the value of the property. And similar, somebody asked a question about the criteria of the private lenders. Well, they'll have their own things. You know, one guy's, I like that type of real estate. I don't like that type of real estate. And the next guy says, I have no problem with that type. I got somebody say, I only like dealing in this Central Florida. And the guy says, so long as it's Florida, I don't care. So they're all different. Okay? The beauty of it is that if they're with me, we come to an agreement. You tell me what you like, and as long as I bring you what you like with this set criteria, you're gonna do it. And so very few deals I can't get done with my private lenders because they're going on that if I know what I'm doing and it meets their criteria they ask for, it's gonna be fine. It's fast. We can close a deal in 5 business days.
Wow.
Okay.
No paperwork.
No, there's paperwork, but for instance, we closed one quickly because the property assessor value compared to what they were looking for was very low. We didn't even ask for an appraisal. Another one we got an appraisal done, but I got a guy that will do a good commercial appraisal in 1 week. I
Depends
don't,
on the
And I can
person.
attest to that.
correct. And I don't,
As opposed to, how long?
that's supposed to 3
3
weeks.
3 or 4 weeks.
A commercial
3
appraisal,
Correct.
3
Yeah.
weeks.
Correct,
Yeah, they're slow.
correct.
It's a lot
Yeah,
long.
that's normal, but it takes
But
at
the
least
reason
a
I can get it done in 1 week is because for my private guys, I don't need the book. Half the book is the county statistics that
Yeah.
I've seen on every appraisal. I just need specific
Facts.
things. So that's why we could do it that fast. These are typically a 1-year loan with an option to renew for 2 or maybe 3 interest only. Okay? They're from 12% to 18% depending on if it's private guys or hard money guys. The hard money guys are up on the 18%. Private lenders are.
Many of you know that as a bridge loan. You do this in order to get to the final loan that you need at the beginning.
Correct. This is meant to be, if you heard the term bridge, this is a bridge loan.
But it's a good-
They gave you 1 to 3 years to do what you need to do so you can put it into something permanent.
Is the loan to value based on the ARV or?
The loan to value is based on an appraisal, or if I get comfortable with the assessor value, we'll use that. If you wanna give me a broker opinion, if I think the broker did a decent job, maybe I'll do that.
So not based on the after repair value?
Well, these are typically not for construction and development, these are for buildings already existing, occupied.
Without having to repair?
Correct, that somebody can go in there right away.
Oh, okay.
Remember, we're talking about business occupied, but I also went into rental, the same thing. Everything we're talking about has to have a building on it. The last piece we're gonna cover is construction development. Okay?
Yeah, if you remember, we went back to the 3 types of properties.
Yeah, but I'm thinking about a building that needs repair.
And it's free and clear, for example, and they can take some cash out and then do a final one, right?
But that would fall under construction development, not under rental, not
Okay.
under.
You guys getting ahead.
Because it's not rented.
Correct. If you had it-
What if it's rented?
If it's rented and you have a CO and the tenants in there, then it falls under either rental or business occupied.
That's it, yeah.
And then you can use the 65% for whatever you want.
What do you guys
Yes.
think?
Remember, a business loan is for a business purpose. You can't do a business loan for a Corvette.
No, I'm saying I was saying to improve the property.
Yeah, to improve the property, to buy another property, that's what I mean.
Right,
Not to
that's-
get a Corvette.
No,
That
because you
To
want,
improve the property so then I can do.
correct. Correct. The
A
reason I
final
said-
loan, because that's only a bridge loan.
Correct. Well, the reason I said it though, because one of my lenders requires part of the closing documents is a handwritten letter stating you're using this for a business purpose and not for personal.
Buying shoes or
Correct.
going on vacation.
Yes. So the process is less than 30 days, depending on if there's an appraisal or not, or one needs it or not. Okay? Investment properties. So we're done with the guys that are gonna have their business there. These are purely rental properties. Okay? And again, that means that
Less
it's
than
all
50.
third-party tenants, or there's a business owner there, but he doesn't occupy more than 51%. So these also include 1 to 4 unit family, multifamily properties, apartment buildings, commercial office buildings, shopping plazas, retail building, anything with a tenant. These typically are financed no more than 75%. If the property is more of a specialty, then 70%. If it's an apartment, a stabilized apartment property, which means, stabilized means that it's got 90% or greater occupancy. If it's stabilized, then in some major markets like New York City or Miami, we can do 80% financing on if the loan's gonna be $1 million or greater. Okay? Any questions on this program? This will
One
be-
quick note for the New York people, rent control have an issue on this. If many of our properties in Upper Manhattan that are still 60% rent control, we have an issue with this type of loan, so we'll explain that later on.
Well, I mean, it affects that loan because the value of the property is driven by the rent roll, and if it's got rent control, it's gonna bring down the
Of
value.
course.
So, okay, conventional bank loans will only do 75% on these type of properties. They'll do a 5-year loan with a balloon, maybe a 10-year loan with a 15-year amortization or 20. So that's much tighter than owner occupied, which means you can afford, the buyer can afford less. Typically, there's a balloon payment, so that means they have to pay it off in 5 years, or they have to refinance. If they do a 10-year, the rate's gonna change every 5 year. Again, origination fees of 1 to 2%. It's a 45 to 60-day process because they won't order the appraisal till it's approved, and the appraisal takes 3 weeks. So that's where it falls in. On some of my products, the appraisal is done faster because the approval can be done much faster. But a typical bank takes about 2 to 3 weeks to get it approved at the minimum. And then another 3 weeks for the appraisal, and then another 2 weeks for closing. So you see we're already up at 60 days. These are fully documented loans, which means they're gonna make sure the property cash flows, and then they're gonna look at the individuals and make the individual also can cash flow. One of the beauties of the non-bank lenders is that second part is not done. It's done just if the property cash flows it, then we got a deal. We don't care what you are doing personally. Okay. All owners of 15% or more are required to guarantee on a bank loan because of a regulatory requirement.
And we are doing less and less conventional bank loans, as at least for the last 5 or 6 years.
We're back to the stated, okay? What I want to point out is the stated does up to 30-year amortization. Longer amortization, the more you can afford, okay? I mentioned, can be used to refinance and get equity out so they can buy another rental property and do another one.
Can they do
A
it
bank will not
immediately?
do that. A bank won't do that.
Can they do it immediately? I mean, after they close, or do they
Yeah.
have to wait?
No, if somebody owns the property, like, I get people coming to have held the property for 10 years. Their mortgage, their value is maybe $1 million and they owe 200,000 on it. They go to a bank, the bank's gonna say, no, we're not giving you money out, we're not giving you equity. Through our program, up to 70% or 75 if it's multifamily, you can get the cash and invest it in something else, in more real estate. So that's a way to, if you have a client that's an investor who's looking to buy more and more, look at their portfolio, see what they have. Maybe we can do a cash out. Okay? I
We
also,
can turn that around over and over and over again, which means that you are getting that client to on a permanent basis for
Building up his
yeah.
portfolio.
right.
The money.
Mhm. And again, less than 5 business days, you'll have an approval. Nobody can beat that. And if you've ever applied for a loan with a bank and waited 30 days to say we can't do it, you can appreciate five days to say yes. And nobody's asked, what if it's a no, George? If it's a no, you'll know in 24 hours. A yes is less than 5 days. A no is immediately or in less than 2 days. So we move it fast. We're not gonna sit on it. We're not gonna drag you around making believe that there might be a possibility if it's not. Okay? But by the way, just a quick thing on those of you who have a 1 to 4 family. This can be done for one single family house, but there's a special rule on one single family house only. To do it in a single family house, the buyer, this must be their third home. They must own their own home that they live in. They must have a second home, which is considered their second home, and we will do the third.
Stated.
Correct, stated. So,
75%.
So wanna make sure it's an investment.
correct. So, unlike on the resident side, they don't allow play games. This gotta be your third. Okay? Now, if it's a two family, 3 family, 4 family, that doesn't apply. Okay? Okay. On apartment buildings, we have a non-recourse product if the loan is over $1 million. On that, the guarantee is what we call a bad boy guarantee, which means that as long as there's no fraud involved on the part of the owner, then he's not liable for the loan. And this is in an apartment building that's stabilized, which means 90% or greater occupied, and typically 75% in most markets. New York, Miami, Los Angeles, Detroit, we can do up to 80%. On rural markets, 70%. So if you bring me something in Lake Wales, okay.
Orlando's not rural.
All right, Orlando's a standard market, but it's non-recourse financing, 30-year financing with a very good rate, a rate that's right now between 4.95, 75, depending on fixed for 5, 7, or 10 year. Right now, there's an odd where the 10-year rate is a better rate than the 5-year rate, just today. So, for those of you who deal with clients who are looking to buy apartments where the loan's going to be at least $1 million or more, this is a great product where they don't have to personally guarantee. Now, there are some requirements in order to be able to qualify for the no personal guarantee. That is, the person has to have at least $250,000 in liquid assets. So this product is meant for guys that have more than 1 apartment, 2 apartment. It's not meant for the guy who's buying their very first one and they barely have the down payment.
For bad boys.
Okay. We can get a term sheet in less than 5 days. This is all we need to get the term sheet, and then it'll be approved two weeks later. And with the appraisal, we could almost do this in 30 days. More realistic, 40 days. Okay. And these products, every product I've mentioned is available just about every state in the U.S., not just here. Okay.
That's 75% of appraisal or purchase price?
Purchase price. If it's a refi, appraisal, but if it's a purchase, 75 of the cost, lower of cost or appraisal. Meaning I just closed a different deal when it stated where they paid 160 for it, but it appraised at 200. We did
So you went
we did
75 or
70%
160?
at once. Correct.
Yeah, if not, you will come down with 0.
Correct.
That's what that's what I was.
Okay. Not much different than private loans. They work the same way for rental properties. Just same thing that I mentioned.
More
for-
expensive. That's it.
Well, it's more expensive, but depending on the deal, there are some deals we've done where the owner hasn't had to show me any financial information.
So very little documentation.
And we've closed it in 5 days. So, now, I didn't put on here, and I'll mention it actually in the next section, construction development. Construction development meaning something's gonna be built or rehabbed that cannot be occupied today. Okay? One thing to note, nobody is lending on raw land that isn't gonna be developed today. Before the crash, there used to be land inventory bankers who would buy all this land, they had no intention of developing it. They were just holding it to sell it to a Lennar, to somebody, okay? With the new regulations of Dodd-Frank, there was a regulation that said that you had to show how repayment was gonna be made outside of a sale. That pretty much killed raw land financing. So, unless the land is ready to be developed, with its approvals already, and you're going into the project right away, nobody's gonna finance it if we're gonna do this 1 year down the road, 2 years down the road.
For us, yes, as we do business, that means that we need to have the plan for development for that property in place in order to put the transaction
Before.
together.
Correct.
This is what we are talking.
You can get a prequel though or something, or
Correct, so we.
before spending money on plans.
For example, what we are doing right now with one is we are putting 90 days or 120 days for due diligence, so we can go in, get the permits in place, and get the whole package together, so then we can present it as a product to be purchased and developed immediately.
The key here is, my lenders are not gonna lend unless it's gonna be developed now. Yeah, they don't have any interest in just raw land. They can't do anything with it. A bank won't finance it. A non-bank lender won't finance it, so my private lenders are, okay.
Bless you.
And then they're just financing the land, not the construction.
They'll finance both. They'll finance both. This is construction development, includes land and construction.
You have to look at it as a package.
Correct.
Immediately.
Correct, immediately.
But it has to be
As soon as
ready
you-
to.
It's not built, but it will be built
soon
immediately
as you
with this
close,
financing. So
yeah.
you are buying the land and getting the money for the development in
At the
one.
same time.
No, it's just that it says site work development finance is only available from some hard money lenders.
Site work is when somebody is just, they don't have the ability to, if they bought raw land and they're looking for the money to do the site work, so it's no longer raw
Infrastructure.
land.
Like for
Infrastructure,
example, the Kissimmee
Roads.
case.
okay? So, the lender wants the finished product already be part of it. Nobody's gonna finance just the site development before there's even a plan of what they're gonna sell.
Okay, like parking lots and.
Well,
Not just parking lot, but, okay, I wanna buy that piece of raw land, it's 100 acres, and I'm gonna cut the roads and all that, but I'm not a builder.
and then sell lots.
Now I wanna sell
You
it
cannot
to,
do-
sell lots or sell it
Yeah, like
to
a
somebody.
builder kind of.
Correct. That's site work. Now, I do have one lender nationally that will do site work and construction, and they'll do site work with future construction or lot sales, but they'll do up to 50% of a liquidation appraisal, okay? Minimum loan of $1 million. Just about anywhere in the country,
At least.
okay? Good. Okay. And when we're talking construction, I know Jerry, you know this, but, and everybody else, we're talking about either single-family development, or we're developing something for the business to go into, or somebody's got a contract with somebody to just build it and sell it immediately, that's what turnkey, or it's an acquisition of something that can't be occupied right now because it needs work to what we call a fix and flip. We do have a fix and flip program for residential loans that will lend, either to fix it and flip it and sell it, or to fix it and rent it. And it's like a 12 to 18-month loan, interest only, to allow you to go in there, fix it, flip it and sell it. And then on the hold it, it's about a 3-year loan.
Residential?
Residential, correct.
Mhm.
Not for the person to live in, but for
Yeah.
rental,
Mhm.
correct. Or somebody building a shopping plaza. So that's what construction and development means. So it's not just, it could be for rental property being constructed, or it could be for a business being constructed.
And they do, what's the percentage?
Typically,
LTV, I mean.
On the
well,
flip, on
they're
the flip
different,
program.
they're different, that's why I'm
No, on the
going
one that
down.
you're talking right now, on the fix and flip.
Fix and flip, there's two programs. One will do 90% of the acquisition and 80% of the after completed value.
Either or, whichever is slower.
Correct.
Okay.
And for those who are interested, I can send you the application.
And they don't finance the construction.
Well, no, there's one that finances the construction for the fix and flip.
There's a
individual.
fix, so I imagine.
Right, so you get, the way it works is you put 90% of the acquisition,
Mhm.
and then they lend
the
you,
flip
and they lend you also 80% of the after done value.
Yeah.
So you're getting the rehab money in there, a percentage of the rehab money is being lent to you after you put your 90%, you own it, now the rest of it's piecemeal to you,
As long as it's not over 80% of the area.
of the final value,
Yeah.
correct? Yep. So. We have done construction projects or development projects with private lenders. It's different things for different lenders depending on what they like. We did a what was that up there in Maryland? That was what, $1 million roughly?
It was 1 point something.
$1 million single family construction project where we did do site work. And then we got to the lot stage, and then at that time the project turned, instead of going residential, they decided to sell lots. But we did that with a private lender. We almost got it done by a bank. We were this close, but they needed an exception from their regional president, he wouldn't give it. So, they all have their little odds and ends. But typically 18 to 24 months for the project to happen. This is what we need in order to be able to look at it. Okay? I won't go through it, but you have
Mhm.
questions. I know you've been asking questions in the meantime, and I've gone through a lot of stuff quickly. But the key summary, and then we'll go over the questions. Key summary is you got programs for owner business occupied that leverage to 90%, so you can get somebody in there with 10%. Today, if you approach a business owner renting, and they got that 10%, it's a lot cheaper for them to buy it and own it. So bear that in mind when you're talking to prospects. You know, if you got the 10% down, we can get you in your own place. Okay, with the SBA program. On the stated program, use that to leverage cash out for more projects. Use that also to do projects where people have the 30% down, but just can't show their numbers. Okay? On the fix and flip, we'll make sure you get the fix and flip if you have that type of client. We also have a program I didn't put on here because it's a specialty program, but if you have a investor that has like 10, 20 residential homes that they're rented, we have a pool loan program where we'll lend against all of them to take out equity to let you do more projects.
Sure.
And so that's another program, but you have to have minimum loans of at least $1 million. You have to have at least 5 properties. None of the properties can be less than 80,000. So, and they all got to be rented. No lease to rent. If anybody's interested, I'll talk you through it. But if you have, I had one guy approach me once who had almost 100 homes. But he was doing every single one separately. And he wanted to use run out of cash. So we put that program together for him to tap into the equity he had in his homes to be able to do more.
That's nice.
So, any questions on?
Before we jump to the questions, let me give you a piece of information that is valuable and it's just happening. Everybody have been at a CPA or a good accountant for tax returns over the last few days.
I have.
Okay? Your story is a different story. You see, the one of the things that I want you to develop in the commercial real estate is the opportunities. Okay? I have done about 7 or 8 CPAs over the last few years. And the reasoning that I use is very simple. Okay? If a CPA has an office that he's paying rent for, okay, most likely you can get him on the correct financing with Jorge, get him a property, which you will get your first commission there, then develop that property and convert it into rent, which you get the development profit. And then that client, once he experienced the process and see how simple it is, how productive it is, and how profitable it is for him, will be the one that will send you clients every day. I have, for example, I did Ella Ball a couple of years ago. Ella Ball sent me every year 5 or 6 clients that are exactly where she was, and she knows because she's her accountant.
She sees the books.
She was renting in Lee Road
Beautiful.
for 12 years. A CPA. In 20 minutes, I show him on a whiteboard what she can do. And a year later, she was on a fantastic office on Lee Road, on a prime building, owned by her,
Collecting rent.
and paying herself retirement. And we have the way to finance that and bring those clients to us. So, as we go through this process of explaining you all of the things that we can finance, how we can finance, you need to start looking at how we can take these from concepts to clients that we have, that we are dealing with every day, every single day, that we can convert into clients. Just bring us a name and we will help you do it and make it happen easily. Questions? And now you can be as specific as you want. All of those things that have been hitting your head, how can I do this, how can I do that, that's the time, this is the person to answer those
Now, the
questions.
other thing that I do for all of my relationships is that if you have a scenario you want to discuss with me, give me a call. I mean, part of what makes my business go is because I assess things very quickly. I do not let them sit and then it goes nowhere. If it's not feasible, I'll let you know in 24, most deals, in 24, 48 hours, I will let you know if it's not feasible or if it's feasible. And if it's feasible, what you gotta do to come back to make it happen.
And obviously then you have to get the client to get the information to you, and sometimes that takes time, because they don't have it ready.
Right.
But if we know what we are doing, it's completely different to wait for that information than to, be. Most of the deals that Jorge looked at, he come back to me in about 24 hours and says, yeah, we can do this, and we can do it this and that way, but we need this and this. And that's where
So
the
you
whole
would rather
process-
get, like, for example, documentation ahead of time, so you know
Well,
the scenario, or
If
not
you
necessarily?
when I get a business owner call me up as an example, and they start talking, what I say to them is, tell me what you're trying to do. And then explain, so I'm trying to buy a building, do this, fine. Yeah, it's feasible, we can probably do that, here's what I'm gonna need from you. And then give me your email, I'll give you back exactly what I'm gonna need to be able to look at that based on the scenario you're telling me about. So, and what I'm doing, is what I did in the first slide was basically, is this owner occupied, is this investor, or is this construction development? Once I know which bucket, then I'm only looking at those programs. Once I know what type of property it is, once I know what industry it is, and a little bit about the business and the owner. Now, pretty much I got an idea of what are the products that could help it. Now, and can we do it feasibly? I need to see some numbers. And so that's where I'm saying, okay, here's what I need. Boom, 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 boom.
And the good thing is that with Jorge, if you present to Jorge what your client wants to do, he will come back to you with ideas that you have not even think about because of his experience about how we can do it effectively.
I like that.
What's your go-to loan? Like, what's your popular product?
I'd say my state is one of my most popular, but SBA is right there behind it.
Okay.
It depends how much down payment the person has.
Well, it really depends what the project is.
Yeah.
What's it in the right one? Like, for instance, I had a guy, and nobody asked the question, why do brokers give me so many deals? Okay? Aren't they supposed to be doing the deals? Because they typically don't have my background, they're not credit trained, they're just application takers. So they have this deal, this client, but they don't know what to do with it. So they come to me, boom, 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 put them in a way that it's feasible or it's not feasible. I had a broker come to me with a client who'd been caring for 3 years, which he called his top client. Never did anything with them, had a huge file on them. We sat in a half hour, showed him, you wasted 3 years of your time because this is not feasible. And let me tell you why. Okay? So, brokers bring us deals because they know we could get it done. You may have an SBA guy, but that's all it's ever done. And somebody shows them a rental property. He's like, okay, what do I do with it? What can I do with this? Or what they typically will do, package it up, throw it up against the wall of a bank, wait the 30 days and see, nope, okay, let's pick it up, throw it up against the next one. And that's what they do. With us, no, it's 24 hours, 48 hours, feasible, not feasible, here's what you gotta do, we move it, boom, and it's done.
And by the way, we recently have a case that we work with, and eventually the client decided that he wants to go with somebody else because obviously he didn't like a lot Jorge or myself.
Oh my God.
How can that be?
I don't know.
The team.
But you know, that
It
happens
happens.
once in a while. Well, that client have been calling us over the last 2 or 3 weeks with all kind of questions, all kind of issues. Oh yeah, because now you know they are in the middle of trying to close a transaction for
Not
for 3
knowing what to
weeks
do.
now, and still have not been able to close it. And if they close it, it has been because of the advice that we have been giving them.
Now,
So
now, without getting into details, I will just tell you, you know, I've been doing this for over 30 years, managing people, and every closing that was done, the attorneys had a rule. They needed to copy me on the status, because if something popped up, the only person who can rectify it is me. So, I've done just about every type of transaction. In the scenarios, one of the scenarios we're talking about, we did one deal, and after that deal, we were talking about a second deal, and in that second deal, I said, you gotta be careful, you gotta do this to be careful. The advice was not taken. It ended up costing them a lot of money because they did not follow the advice I told them.
Good.
And then they were in a hole. I got them out of the hole. And guess because we pointed out that major finance cost was done because they didn't really heed the advice, they decided to try to go somewhere else.
Are you kidding? After you guys help them out, took them out
That's
of
the name of the
hole.
game. That's the people that think they know what they're doing and they can do it on their own and don't
That's
have
why I
30
let
or
them-
25 years
Let
experience
them
behind
give
them.
themselves.
yeah, but again,
But the only point, it wasn't to bash anybody, it was just to his point that, honestly, I'm being very honest here, if they had followed my advice, and what I told them, they would have saved themselves at least a 6-figure number.
What?
And the interesting thing is that the advice was not crazy advice, was very specific and was given with a rationale, because that's one of the things that I like about Jorge. Jorge tells you, we need to do this because of this. So he's telling you why. So, don't act then like, oh, I'm surprised. We told you that they want.
I didn't know. Peekaboo.
Any other questions?
No, my brain hurts. It's a lot of info.
It's a lot of.
Again, I was,
George, listen, you're on my
all I
speed
wanted
dial
you to
now.
remember, all I wanted you to remember is that
Call you.
there's 3 types
Yeah, I'm
of
gonna have
products.
my speed dial.
You can call me, but if you get anything, I want you to remember there's 3 type products, and when you find it's completely different. 10% to a business owner gets you the deal, okay? And for the guys that got the cash but can't really
Stated.
show it, we got the stated product.
30%.
And leverage the stated for people who have portfolios to get more business, to give them more liquidity to do more
That
business.
was really good.
So those are 3 things that you remember from it. Remember that. And you don't have to be an expert in finance. You have scenario, just call me up and boom, boom, boom. I'll tell you if it's
Do
feasible
you
or not.
have a team? Do you work, alone? Like, if we all call you at the same time, on the same day?
My motto has always been, no matter where I worked, I had a rule that you got back to the client within 24 hours.
Cool.
So if you don't reach me immediately,
In 24 hours?
leave a
Let me tell you
voicemail
the way it
message and I
should
will
be
get
done.
back.
The way it
Yes.
should be done. You go to the website and you go here where it says financing.
Your website.
Yeah. And you simply fill out the form
Oh.
with the client information. Very simple, about 9 spaces.
Well, what site is that?
The continental. Now,
Rafi's website?
once you get there, what will happen, and this is important, what will happen is first of all, we will open a file for you regarding that transaction, which is shared by Jorge and myself. I will help you do follow up with documentation and pickups and so on while Jorge is working with the transaction.
Cool. That's
And we
even
will
easier.
keep you up to date by email about your clients and what is going on.
I will tell you that if you call me and I'm not available, just leave me a good voicemail message.
The details.
My voicemail message immediately get turned into text, email, and it hits my
I'll
phone.
tell you the whole entire scenario. Hey, George, I have this. No, click. Okay, the second
So,
one.
because it's that way I know what you're calling me about, and I can quickly jump in and get back to you, as opposed to calling, hang up, and we play telephone tag for 20 days and nothing gets done. So my phone is set up, so any voicemail goes immediately into a text and I get an email. You fax me something, it comes to me in an email. So it's easy to reach me, even if you can't reach me directly, I will see it.
Now, be aware that one of the reasons that we do what we do the way we do it is because it has proved that it's faster for the client to get in place, which is at the very end what we are trying to accomplish. We want to close a transaction, so we need to make it happen as soon as possible. So that's the reasoning behind the process that we have created. Obviously, it works the same here than in New York. The guys in New York know what to do, and that's the same. The other important thing is, remember that for us, financing is a tool to get commercial real estate transactions. We can enter into transactions by way of being able to finance to them properties.
You gotta
So
know
have that in
You
mind.
wanna know how to pitch
Yeah.
each product
It's
right.
an opening door because we can convert a single situation through the programs into potential alternatives to give the client better performance on what they are trying to finance and how they are trying to
And
finance.
if I get a client that tells me, oh, well, I know so-and-so in Wells Fargo, and I wanna go with Wells Fargo, what would be my best approach trying to get them at least to talk to Jorge to see, if we can change
Well,
that?
What I do,
Mhm.
okay, is I have lenders compete. Okay? The big difference between if you go into Wells Fargo and I go into Wells Fargo is you go into Wells Fargo, please, I beg of you, do the deal. I go into Wells Fargo knows there's at least 2 other lenders that are seeing the same thing. And I've already done the work for them, so they're in You gotta move fast and you gotta compete.
So they can still do it with Wells Fargo, but
I'll
we're
beat them,
gonna use Orient
I will
services.
beat them every day.
Okay.
On the same deal.
On the same deal.
Because of the relationship, we will
Correct.
be able to get better
Yeah, that will
deals.
be my closing statement to get them to do it with
Yeah.
you.
In
or
addition
faster
to the
and so
fact,
on.
that for some reason, people have come to believe that if they have a relationship with a bank, that they will be preferred or better
Yeah, that's what everybody
treated and so on,
thinks,
which is a completely wrong perception.
Especially with Wells Fargo.
Well,
Correct.
let's take
Or
a poll
Fairways,
here.
but-
Let's take a poll here. Who has done business with Harbor Bank?
Who?
Harbor.
Bank. Who has done business with Banco Popular?
They're out of business, huh?
Correct. Who has done business with Sunshine Bank? Okay. The point I'm trying to make is the banks get merged and change management all the
All
time.
the time.
So you think you have a relationship, but the person
Well, you don't.
because the person that makes decisions have been changed all the time. Plus, remember what I told you: the person you're talking to is not a decision maker.
No, those people
They're
don't
just
know
an
any
application.
of them, or there's that I know, for sure.
Well, their job
They're
is
taking applications
right.
in,
Their
that's all
job
they're
is
doing.
they're being rolled on applications
The
coming
website.
in,
Yeah.
The website, right?
not on
You can
business
see it.
people.
Can we tell them you are what?
Cinco.com.
I'm a loan broker.
Cinco.com.
A loan broker.
Correct. And what I
Cinco.com.
do is I put lenders to compete
Investment.
by
CII.
like, just like I said, if you go to Bank A, first of all, you don't know Bank A even does that type of loan. The manager's gonna tell you they do, because remember, I told you, banks say we do every type of loan.
Right.
Okay? Number two, you're going in, please, I beg of you, do the deal. As opposed to if they're competing. When I get to them, I'm not going in with an application, I'm going in with underwriting analysis.
I can say that
And I-
you're a broker,
Loan broker,
loan broker.
correct.
And the other thing that is important for the clients to understand is that even though if they have a good relationship with the bank, and there are some people that have it, the way we process the loan may not use that person, but use somebody on the structure of the bank that is more capable of approving that deal in a better way with a better, and we have that with many banks, okay? And many lenders in general.
Yeah.
But it's again, understand that this process is a door opener for real estate transactions also. You don't know how many things we have done in real estate because we were able to help them with the financing.
Of course, right.
So here's a question nobody's asked yet. Are we allowed to get paid from by getting a loan to you?
On our process, you get a
Something.
something on of a percentage and by the way, we
We
still
were
have
not
that
thinking that,
conversation
Jeremy, only you were
pending
thinking that.
for you work.
Yeah.
But yeah.
Percentages always good. Yeah.
I guess
Again,
I guess the question comes because in residential, you cannot
Yeah.
pay anybody
Correct.
that is not a loan officer.
Against
So
the
that's why.
And-
rules that
right.
we
and
They have a commercial, they don't have licenses.
Right, that's why he's
And
asking.
remember, what is important for you to understand is that where you will get really significant amount of money is the deals that will come out of that relationship.
Yeah.
So this is kind of stepping stone.
We need to make an appointment with you in our office. I have a
Urgently.
ton of questions.
You're in Hunter's Creek, right?
Yeah, I mean, I have a virtual, we do business all over the US, so
Okay.
that's
So the
a,
address is Hunter's Creek.
it's a virtual office.
Okay.
That's not a real.
Right. If somebody wants to actually meet with me in an office, which rarely happens, okay? Because the first rule of lending real estate is you go kick the tires of the real estate. You look at the real estate. If you don't do that, you get burned. I had to let go of a lender who we did a deal on. Yeah, he told me, "Did you go kick the tires?" Yes, I did. Great property. We closed the deal. 3 months later, they come in for money because water's leaking in their roof and the tenant's leaving. How can that be? The property is in great condition. I go out and look at the property, I go into the unit, and I look up and there's a humongous hole in the ceiling. Oh, huge space. Come here. You told me that this building was in great condition. Oh, I'm sorry, I didn't go into that unit. No, you walk the whole building, that's the first rule of financing, the condition of the building. When I'm gonna finance real estate, I go out and look at the property, take pictures, and assess the condition of the building to see if it's gonna need improvements as part of the loan. Because my lenders will not finance something that's run down unless it's part of being fixed up. So I got my stated program, you should know this, if the property is built before 1978, they're gonna do an inspection of the roof. They're gonna send somebody out to take pictures of the roof and all that, because they wanna know the property's in decent condition.
Well, we hit 9 o'clock, unless you have any other questions, we're gonna be here for a little while.
Very interested in.
So we'll see you in 2 weeks.
He's the money guy.
Yeah, my brain is fried.
My brain is
When
fried
are you
too.
gonna-
Again, just focus on those three things.
For what?
Just give him the client.
Oh, just let us know, we can, whatever we have a meeting for Monday.
Monday will be
Just
fine.
make sure you have
Okay,
good
available
credit.
Monday?
Yeah.
For the G-roll?
Yeah.
This is your cell phone, right?
What time is good for
I've
you?
had cell phones for about 20 years. First rule when any bank I went was to have phones forwarded to the cell phone, so that my people always available.
I have a lot of questions to start structuring what we're gonna do. For the numbers that I'm looking at, it's gonna be like 2.5. So, but there's a lot of variables that we need to go over so we can start preparing for it, since we're looking for lunch. So, he's checking to see if we can do Monday at 11.
Yeah, that's fine, I mean, he asked me about Monday for another meeting, so that's why I looked at it.
We're in Dr. Phillips.
Now, the building that you're gonna build, obviously that's not the building, we're looking a lot.
Yo te llamo antes y nos ponemos de acuerdo. El martes sería mañana. Jorge, are you available on Tuesday?
Pregúntale a
Oh
Jeremy
yeah, el
si-
martes, because Monday is my birthday.
Okay, pero ese es un día federal.
Exacto.
Pregúntale a Jeremy si
Pregúntale si
mata a las 11, hombre.
Baby.
Yeah, I mean, I got a 10,
Yeah,
it should be over by.
Can we do 11:30 there?
11
¿Tan lejos de Dr. Phillips?
No.
Okay.
Martes 11:30. Let me put it on the schedule.
Just shoot me the address.
Well, you coming with Rafi, no?
Yeah,
Sí,
I'll
pero
probably-
viene
I'll
de
probably-
forma procesada.
Yeah, I'll send it to you. Give me your business card. I know you guys didn't want to know.
Yeah, see if I have one, but it's also on here. For sure, that I gave you.
Jorge Machado.
Oye, Rafi, que yo te iba a preguntando a ti. La licencia de mortgage broker, cuando yo cogí mi curso de mortgage broker, que saqué las licencias, eso fue hace... ¿Por qué cambió la ley ahora?
No, eso no fue ahora, eso fue hace
Por
ya.
eso sí, hace un montón. Si yo hice mi ¿cuándo fue Tito? ¿En el 99?
Eso cambió totalmente.
Hace 20 años.
Martes a las
Martes
11.
11:30. Estamos
11:30, martes 11:30.
Mortgage broker, licencia mortgage broker
Si me pueden mandar eso antes, yo voy y lo veo. también.
para residencial, para casas, cambió porque antes eran los estados que hacían lo que tenían para la licencia
O sea, no está en el
y lo
mercado.
cambiaron a uno nacional.
Sí, eso.